All right, so I was looking through your YouTube channel. You just posted a video talking about a $3,438 a month dividend portfolio you put together. I want to talk about it because and we're going to go through every single one of the stocks and ETFs he mentioned here. We got, VFV, XDI, those are a couple of ones that I think everyone knows about. XDIV, TWCN, H, but then also a bunch of American. Everyone, I'm going to be putting the stock tickers below. You'll see them here as they pop up. Make sure you use the chapters below as well so you can navigate around to all the different stocks and ETFs and all the other subjects we talk about. I don't want to waste any time. I think let's just jump right into it. I'll start with the easiest one, and everyone knows this. And really quick, I've noticed over 80% of viewers who watch aren't subscribed. An easy way to support the channel is by hitting that subscribe button, and I personally commit to continue providing quality educational content with each video. Okay, VFV.to for anyone looking it up. You put 10% of your allocation to this. That comes out to about $100,000, and that would pay you out $1,139 a month. Oh, no, a year at 2.8% of your overall dividend payout. So this is for retirement. Why are you holding on to VFV in retirement?
Yeah, this is an interesting conversation because it kind of clashes with my own personal opinions because I was trying to framework a portfolio that would help people think and give them a guideline to be like, maybe this could work for me in some sense, and trying to find and look at total returns over just dividend income, because I really hate a lot of the fallacy. Because even in the comments on that video, you'll notice people say, oh, what about this? It pays 9%. But then when you look at the total return since inception, it's well below 9%. So you're not really getting that 9% dividend. You're actually getting a lot less than that over the longer period of time. But VFV, again, it really depends on your own personal understanding of like how you want to collect income. Because I'm a US guy. I like US dollars. I don't like converting the currency, but here in Canada, a lot of people prefer to just hold a Canadian dollar asset, whereas I'd rather hold the US dollar asset and keep it in a US dollar account. But I figure, and same with my parents, because my parents, they don't want to deal with US dollars. They just want to get some good exposure. And I said, you need to focus on growth to some extent. And they retired in 2023, and we made VFV about a similar size position, and it worked out incredibly for them. Since the end of 2023, it's gone up pretty substantially. My mom was able to pull some capital gains and buy a car, and the return rate was so much higher than a lot of the other dividend stocks that they were holding. But since that time period, the markets have done generally well. But I don't know, VFV's, I guess it just depends on your personal circumstance. But I'd still like it, I think, for Canadians.
Yeah, let's talk about that a little bit. I've been thinking about this a bit in my retirement. First, my original thing was when I retire, I'm just gonna go balls to the wall. Everything's gonna be high yield. I'm just gonna crank out monthly income. But I'm like, wait a second, I'm not gonna die when I'm 75. Like, why am I just burning the candle at both ends for 10 years and just trying to get income? Like, maybe I should still think about growth to some aspect. I do want to live until I'm 95. I want to keep living. Your parents probably want to continue to live. So I think for me, looking at it, I go, okay, great. You have a growth foundation there. VFV will be fine. You could always convert it later into something that's high yield, even further down the line. And you said your parents pulled out capital from it and bought a car. So I'm probably one of the years it got like a 20% return or something like that, right?
Yeah, I think it's important to framework too that like that portfolio design was similar to what I told my parents, which is like you don't want to manage the portfolio that much. So you want kind of everlasting stocks where you can just kind of collect the yield, don't sell the shares. But, to an extent, like you don't want to give up on any of that upside either, because in periods when the market's doing exceptionally well, those rate of returns are going to be substantially higher. And yeah, you might have a 1 or 2, 3 year dull period, but again, keep an emergency fund, cash aside, make sure your cash flow is enough to cover your expenses, your living, some of your luxuries. But, it's nice having that bit of bleed room to look at more growth oriented investments, because I still think when you look at a lot of what people are running into with option ETFs, a lot of this stuff, it doesn't have a long track record. A lot of these high yielding option ETFs come with exceptional expense ratios. And when you look at the total returns, it is insanely hard to beat. I think right now, what is the since inception return of VOO? It's been like 14%. I'm like, you're going to find it hard to beat that, especially considering people are saying, oh, it's overvalued. It's this, it's that. I would argue that a lot of the traditional companies right now are getting kind of overvalued. When you look here in Canada, especially, our markets have been on fire. But when you look at the US, they're still going through, and again, I'm not just saying the US, I look at companies agnostic to borders. I don't care about politics. I don't care about the dollar conversion. I just care about where my money's going to get the best rate of return. And you have to admit that the US tech companies are still incredibly resilient. We're still going through a massive AI transition, a margin expansion period. And things are still the best trade you could have made in the last 15 years was upper weight tech and then broadly diversify. You'd crushed. I mean, that's how, my wife and I became millionaires. Like, I mean, it's been the trade that continues to be the best, but I'll pass that back to you.
I got a couple questions. First, for anyone retired watching right now, are your parents living off of the portfolio that they have and probably like a pension? Is that what they have for retirement? So it is working really well for them. And they're living, and part of the dividends they're living off of are from VFE. Are they reinvesting any of it?
So when it comes to, they're not reinvesting anything now. Like they're at the stage where like for the first year of their retirement, they're like, let's just get it set up. Let's spend the next 3 to 4 months cost averaging because we just want to get it aggressively in the market. And it was a great time to do it. We got very lucky with the timing of that because I think it was around the bottom of October. And she also diversified. Obviously, we'll talk about some of the other investments, but VFE is not a dividend play for them. To me, it's just purely a growth play. And I literally said it when I told my mom, and she didn't want to buy it. She's like, I just want income. But I just said, trust me, when this does well, you're going to appreciate that you have it because there's nothing wrong with selling it for a trip or something and pulling 4 or 5% out of it. And sure enough, over a year and a half later, she's like, I need to get another car. I need to pull 20 grand off this. And it was all profit. And she still had way more capital gains beyond the 20 she even pulled out to buy a car for part of the payment or whatever.
I like that. I'll be honest. I like it. There's something, and there's some peace of mind knowing you have VFV just sitting there to get that growth whenever there's massive growth. Being like, that's great. You're not just burning through. You're not subject to NAV erosion, all those other different problems you have when you have something that has high yield. Okay, so now the next one, we have XEI. I think that's pretty straightforward. So you put 25% of hypothetical into this. It comes out to about $250,000 this is out of a $1 million sort of investment he would be making in retirement. I think most people would end up with about $1 million if they just underperformed and they started young enough. So that's $250,000. So that comes out to every year $13,820, which is about 33.5% of overall dividends that you'd be receiving. XCI, I'm going to guess that's just because you want capture some growth and then also get some stable dividends, and it's just another really good foundational ETF.
Yeah, I'm not the biggest fan of XCI, but again, if you're looking for diversification and preservation, which is something you desperately need in retirement, I don't, it's kind of trying to find the best of both worlds where you can utilize something that cash flows nicely, that you don't have to sell, offers enough diversity, but still gives you a bit of upside. I'd still prefer some of the other investments that are in there, or even a lot of people are saying, why didn't I say VDY? And because those investments get heavily concentrated into a handful of stocks that are upper weighted in the ETF, and people don't really realize some of the exposed risk that can come with that in retirement. But yeah, XEI is just insanely diversified across the Canadian economy. It's probably like my lowest end pick. I think it's great for income, but again, that annualized return in the history of it isn't as resilient, which is why I think, what was the next stock I put in there? Was it XDIV?
XDIV.to. Yeah.
So that was another good one to pair with it, I think, because it gives you a little bit more concentrated, not as much as VDY. I like VDY a lot for me personally, but that one also offers much better annualized returns in its history. It's a little bit more concentrated, so it kind of concentrates some of the other companies in there while still giving you that 4% yield. So I figured they pair well together. Hopefully combined, they can upper weight some good total returns, but that was my thinking behind it mostly.
So anyone listening, XEI, if you're looking this up, iShares Core S&P TSX Capped Composite Index ETF. XDIV is the iShares Core MSCI Total World Stock Index ETF. And for XDIV, you put a $250,000 on that. That's 25%. Annual dividend, 10,542. So that's 25%. So monthly dividend on XDIV would be $878. Monthly dividend on XEI is $1,152. Monthly dividend on VFV is $95, but we don't care because that's for growth. I'm thinking about this. Your parents they came into retirement in a fairly stable financial situation. I'm just going to assume they have their pension, they had that. So, how much was their portfolio gravy on top, or how reliant were they on it?
So let me just framework this. This is not my parents' portfolio. Actually, my portfolio is wildly different than what I'm showing here. But
let me frame this differently. Anyone using this portfolio, are they coming in dependent on this for their main source of income, or are they do they have a pension or something they're reliant on as well?
So again, this was just frameworking like what do you need to survive and what's the safest and path of least resistance to achieving that goal. And again, I want to say that again, the path of least resistance and the safest way of doing so while not limiting upside. And again, looking for things that have 10 plus year track records that are very reliable and stable. But overall, like, again, it's hard to talk about this portfolio because everybody's needs are going to be so dramatically different. And it's fun reading the comments and talking to people because, again, some people might not need that income and they might be more into the growth side of it. Some people might be heavily reliant on this income. They're heavily concerned about, U.S. withholding tax and, Trump's, new big, beautiful bill that could, cause further implications over the years on the withholding tax. Like all of these variables can really lead to dramatically different portfolios. So, I like this again as a framework, but if it was me personally, I would try and skew more toward US stocks and the Canadian side. But I feel like as a Canadian making Canadian content, this is what most Canadians want to hear. And especially if you go on some of the social platforms out there that are more financing related and you hear Canadians, these are usually what they're buying. So I am kind of leaning into what might be more favorable for the audience. But yeah.
And to be honest, Kate, like no one's going to copy this portfolio 100%, but I'm finding value in it because I can cherry pick things that I like about it. That's why we're talking through the decision-making process of everything. Like, where would this fit in? How would this fit in? And someone goes, oh, that kind of applies to me. Maybe I should take a look at it. Because there's so many here that someone's going to find some value in one of these for the reason why you put it in there. Like, I like the VFV reason. I'm thinking about that right now. Because I don't know why I never really thought about it in retirement. I was like, I'm just gonna liquidate all VFE as soon as I get it. But now I'm thinking, yeah, I'm not gonna die right away. Like I kind of want to keep capturing growth. Why wouldn't I? So it makes sense for me to actually hold on to a portion of my portfolio to have VFE in it. So I actually like that. So I personally have already gotten some value out of it. So, okay, now we're at done VFV. We did XEI. We did XDIV. We know why you did this. Here's the ones I had questions about. So you have TELUS Corporation. By the way, we've only been talking about Canadian. We're going to move on to US after. TELUS Corporation, which is T.TO. You have 16,689 invested, 1.7%. Annual dividend is 1,280, which is 3.1% of your total dividends. That comes out to $107 a month. Why do you have that in there? Why not simplify, just get rid of these?
So this is the same problem that I think every investor has at the end of the day. My parents are in the same boat. They like individual stocks to some extent. I recognize that for most of my life, I was an individual stock investor. Most of my wealth was made in speculation. So I don't like being hypocritical by being like, oh, you can't have any of this. It's way too risky. It's this, it's that. But honestly, like if you see some value out there or companies that you personally appreciate, I've always loved TELUS. I don't think it's a great growth oriented stock, but it can be considered a good income oriented stock at these levels, in my opinion. But again, same with a variety of other stocks. We didn't really talk too much about them. They were kind of just randomly hand selected because I like them. I don't personally own these right now, but I like Waste Connections a lot. I feel like Hydro One, if you go through some of the ETFs, the low volatility ETFs that are out there from BMO or whatever, I usually don't recommend buying them because the fees are too high. But if you look at low volatility stocks that sit in those low volatility ETFs, I think they're great stocks to combine. And typically they don't overlap traditionally with a lot of the dividend stocks that sit within, say, XEI or some of these. So if you're looking to buy the individual stocks and you want to increase yield or increase growth, just to give that little bit of extra play with maybe 10% of your portfolio, I think it's good for looking at things that don't overlap, but, also kind of remove some of the volatility. And, TELUS's dividend, has been fairly stable amongst a lot of the telecom giants. And yeah, if you're looking for income, and again, this was just spattered. I just picked these randomly. I could have picked another 100. These are just ones that I like that at today's values, I think you can get behind. Obviously, Waste Connections is a bit pricey. There's some other ones like Metro. There's so many other companies out there that I think would be good fits if you're looking for more stabilized aspects of your retirement portfolio. But again, this is just me speculating. And I think
this is more like, hey, if you want to work in individual stocks that are stable, this is how you go about it. Kind of like your allocation. If you're going to do it, then you picked three here. You mentioned TELUS, Waste Connections, Hydro One Limited, which is TELUS is T.TO, WCN.TO is Waste Connections, H.TO is Hydro One. Same allocation, 1.7% of your total portfolio went towards each one. So it comes up to like 5% total. There you go. You have 5% allocated towards these stable single stock ones that have probably decent dividends. I don't know too much about Waste Connections either. but an annual dividend of $115, that's $10 a month. Annual dividend for Hydro One, 446, $37 a month. Uh, yeah, I get why you put it in there, so
You can
people
throw a
just kind of
dart at a
understand.
board though, man. I mean, like you got
Yeah,
Canadian National. Like I hear so many different stocks. I just really like low volatility, very consistent, very stable businesses. Waste Connections, Hydro One, like those business models are incredible compared to many in their sectors. Because I mean, every waste is like I mean, nobody even thinks about waste, but it's a huge
yeah.
industry that's evolving too with a lot of new technologies. And Hydro One is primarily just a transmission utility, but it's focused in specific areas, say over something like Fortis. So it's a little bit more stable and up to the right, a bit smaller cap too, I believe. But yeah,
One thing a little bit side off topic is when I was looking at this video of yours. By the way, guys, I've probably already shown it on screen, but I got this all from his last video that he did, just him kind of walking through this as well. Did you use the best portfolio tracker for iPhone that you have on your website to create
yeah,
this
that's
portfolio?
just something that I put together briefly. I use iCloud numbers a lot because
Mhm.
it converts currencies pretty well, and it doesn't update every minute. It usually updates once every 24 hours, I believe. It's not like it's just a really great place if you're an investor that needs to bring in multitudes of accounts and multiple currencies, and you want it all converted to one specified currency. I do have that there, though I don't really promote it all that much. It's just a side thing that if people want to build their own portfolios, I think the spreadsheet tools are pretty useful. But a lot of people are using online platforms these days. I mean, there's a variety of them, right?
Yeah, yeah. All right, so that's Canada. Now let's move on to American Holdings, Schwab US Dividend Equity ETF, everyone's favorite. Professor G on YouTube, this is all he talks about is SCHD.
I did
Amount
quarrels with
invested.
SCHD.
I did own it temporarily and then I sold it. Amount invested about $100,000, 10%. Annual dividend, about $4,000, but 10% of your total dividends, which comes out to about $331 a month. Why'd you throw that in?
Yeah, SCHD I still think can be a great place to collect income. I think it'll be part of the recovery when interest rate cuts come into play. But I personally, like you, I held it for quite some time actually when I made a lot of money in 2019 into 2020, 2021 off Tesla. In my own personal portfolio, I converted it to SCHD because I thought it was a pretty, consistent compounder that kept up with the S&P. But I do not agree with the system that they're currently using. Like for my parents, I believe they hold SCHD. But when it comes to my personal portfolio and I'm a more growth oriented investor, I really don't like the new constitution. I'd really rather the older holdings that they had because they've really changed a lot of the positioning around. And I prefer market cap weighted ETFs. It's another reason that I really like VDY for somebody that's looking for growth in the Canadian markets. Anything that's market cap weighted removes the emotional and self, idea of systems. Because I hate when someone sits there and says, let's try this, and this based off this metric, and this metric because it worked so well in the past. That's how I kind of view SCHD. They had a system that worked very well through a bull market because the comparable, it's been around for what, 10, 15 years or whatever, maybe. And it was through that period where the market was basically up to the right. Everything was going up. But now that we've
Yeah.
been through some more rockier, volatile markets, they're trying to change it up, and it's not really keeping in line with the S&P performance. And I held it for a few years just to see if it would continue, and it hasn't. And I look at the top holdings, and I said, would I own these individually right now for my personal circumstance? And 9 times out of 10, the answer was no. So I'm like, why am I holding this ETF? Right? Like it's not meeting my goals. And I gave it time. Like it wasn't, not patient with it. So
I like that actually. So you looked at top holding, said, would I hold these individually? Answer was no. That's a really good way of sort of filtering through whether you'd hold something or not. Just look at their top holdings and would you want to actually own them? Yeah, that's good as well. I had it as well. I almost exactly what you were doing. I'm like, I wonder if it'll continue this upswing. It didn't. It underperformed. I said, why am I even holding this? I got rid of it as well. The next one we have here is DivD, which is Altruist Global Dividend. I'm not familiar with that one. You have $100,000 in this, 10%. Annual dividend, 4,746. That's
Devo,
11.5% of your total. Devo. It's Devo or Div? Oh, yeah, sorry.
DIVO.
And then, okay, I wrote it wrong. Monthly dividend, 396.
Yeah, I like a lot of people keep asking me about option ETFs, and it's really hard finding the best of both worlds. I know HMAX and a lot of these Hamilton ETFs have become incredibly popular, but they constantly, like, they recently, I think, reconstituted how they were running their covered calls, and everyone keeps saying, "Oh, you can't judge it from here. You have to judge it from here." Like, I'm tired of that. I don't, if I can't look at the last 10 or 15 years of your history and you haven't rode through these volatile markets very consistently, like, I don't want anything to do with it. I need that backstated history, especially when you're charging exuberated fees. If I'm paying upwards of 0.5% in a management fee, and that's pretty low for a covered call ETF, you damn well better be consistent and reliable, especially in the income if that's what I'm relying on, which covered calls are a very hard strategy to implement during very volatile periods. They typically require certain market conditions depending on the strategy, right? So Devo's been around for a long time. The dividend's been fairly consistent. It's got good underlying holdings. It's very diverse. It is so hard to find covered caller option ETFs that meet those requirements. And Devo's got it, I think, annualized around 12%, which is actually very in line with market average return. So I'm like, look, if I'm in retirement, I need cash flow. Yeah, this is a 0.5%. It's a little higher than I would like, but it's right in line and it's meeting a lot of my requirements. So I just threw it in there just so people are like, because I usually hate on a lot of option ETFs, but again, like I feel like people chase that yield. Oh, it pays 12 or 14%. It's like, does it though? Does it though, or is it just paying you back your own money and the stock's deteriorating? Like, because
It's all of that. It's all of that.
it's a lot you got to take into
Actually,
consideration. And I feel like this world of dividends is really again, I used to love dividends a lot, but as I've aged, I feel like it's kind of a trap for 90% of investors who think there's like some dividend snowball that you have to like be a part of. And, like even my mom said something that I laughed at when she was like, I don't want to sell this because my yield on cost is so great. I'm like, you have to look at the capital, the equity you have in the stock versus the current yield. That is what you're making on your money. If the stock went up 20%, your yield on cost doesn't matter because you're up 20% in equity. So like if you sold some of it today, you could go buy something that's yielding even higher that might be a better investment today. Like you can't, like somebody said that if you just put all your money in the S&P and then waited till retirement, sold it all and then put it in dividend stocks, you'd be in a much better place than most of the returns you get from dividend ETFs for the most part. And that's true across XDI, XDIV. Like find me an ETF that has matched a 14% annualized return that VOO's offered over the last 15 years. Like it's crazy, right? Like in those 2 extra percentage points, I don't think people appreciate. Again, past performance isn't representative of future returns by any metric. I mean, you got to really understand things could change pretty dramatically if we go into some geopolitical God knows what. But at the end of the day, like I'm a guy that wants to maximize like an extra 1 or 2% a year. And that's why I pick some individual stocks. It's why I've always been more toward the side of individual stocks where I think I have an edge. Because again, over a 20, 30, 40-year period, if you find a system that works for you or you find sectors you're good with and you can really inch out 1 or 2% even above the S&P 500, people just do not grasp the insanity of how much money that compounds through over a 20-year period or a 30-year period. That's why I just, like I said, it's fun talking about the dividend side. I know a lot of people care about it, but even with my parents in retirement, I have to remind them, like, you're not dying tomorrow. You're like in your 60s, you got a long road here, like another 20, 30 years. Let that compound work for you and use it when it's advantageous, right?
I want to talk more about your investment thesis after this. I've watched some of your content where you've said a couple of sound bites that kind of stuck in my head. So I want to bring that up. Let's just blast through this list because I want to pivot then to your portfolio
Yeah,
and we can
sure.
just go back and forth. And I want to hear, and I want to, I'll tell you some stuff that'll make you cringe. I'm doing a couple things with covered calls that you're going to hate. So I think it'll be great for me to talk
You don't
to
hate,
you about that.
you don't hate covered calls. I mean, there's nothing wrong with them. I just
I'll
speculation.
explain what I'll explain what I'm doing, and then you can tell me what you
Sure.
think. Okay, so we have the Vanguard Real Estate Index Fund (VNQ), another 100,000, 10%. Annual dividend $4,044, 10%. Monthly dividend 337. Real Estate Index Fund. That's why you picked it.
Yeah, the biggest mistake Canadians can make is a lot of. I'm on the assumption, and I know real estate's expensive here, but most people in retirement today probably own a piece of real estate, and I do not like Canadian REITs. I think I've only recently come to the conclusion that you just need to avoid the Canadian real estate market altogether in the publicly traded realm because if you look at the performance of Canadian REITs, it's absolutely abysmal when Canadian real estate is almost 3x in the last decade, yet these REITs have done nothing but go down. There has been horrible mismanagement of Canadian real estate, and there's a huge lack of diversity in this market. So the problem is a lot of people buy into real estate and they're like, oh, I want more exposure to real estate and rental income. Don't get it from Canada. It is a horrible market environment. It has a horrible track record, whereas the US offers incredible diversity. And a lot of people under, like, I just feel like it's a really weird aspect of investing that people kind of get lost in because they just want the diversity or they think real estate's stable. I know that VNQ is probably not the best investment for most people. It's VNQ, right? Is the real estate fund there I mentioned. It's a great place for diversity. And again, if you're in retirement, I'm just somebody that's looking for preservation. And a lot of people under, they either have over allocation toward real estate because they don't consider the asset of their home, which I don't really consider an investment, but it's still an asset, still part of your portfolio. You don't want to over leverage into Canadian real estate because if you own it and then it's 10 or 20% of your portfolio, Jesus, if the real estate market corrects, you're going to feel that pain like way harder than somebody that's diverse elsewhere. But I still think it's important to look at sector allocation and make sure you're diverse across many different sectors. And people are either over or under weighted real estate. And I think it's a good sector for income if you're in retirement, just to give yourself a bit more diversity.
So this is just US real estate then, but it's essentially the same. You're collecting income off of the rental income.
Yeah, 4%.
So it's the exact same as the REITs in Canada, except for it's the American. Okay, have you talked to Bassam about this? Bassam is a Canadian finance pro, anyone who's wondering, and his position on how he feels about REITs. I had him on the podcast and he like I'd done some advertising for REIT companies in the past. I won't name them. And I never thought there's anything like I didn't know too much about know how things went with the management side, but he's like, it is weird. They're the ones benefiting. They're sort of paying themselves, and it's a lot of this stuff is mismanaged.
It's heavily corrupted. I don't know what's wrong with it, but he gave me a little bit of light, but I've dug through it a lot and I look back on it and I'm like, it doesn't make any sense. Like RioCan, some of the largest Canadian REITs, like they have exposure to the best real estate in the world, one of the best growth markets ever. And you would have been better off just putting that money into an actual property. Even if it wasn't a rental, your rate of return would have been substantially higher if you just held it for the last decade. I mean, it's been wild watching the real estate values go up and these REITs values go down. It doesn't make any sense, right?
You gotta watch his clip on my channel. I clipped it out and it's like a little like 5-minute clip, something called like our real is REITs worth investing in, with just him going off about it. And I was like, damn, I had no idea. And I worked with these companies. I was like, I had no idea they're managed like this, like from that level. So I don't own any, but it was something I just put on the channel as now that like a disclaimer before anyone buys Canadian REITs. All right. So yeah, Vanguard Real Estate Index Fund. There you go. Just invest in the American market instead of the Canadian one. Now we have British American Tobacco PLC, BTI, amount invested 1.7%, which is 16,000, annual dividend 1,000, 24, which is 2.5, which is $85 a month. Why'd you pick that one?
I want to just preface this by saying, like, I have a deep affection for the sin stock space because I've been following it for so long, and there's so many dividend investors that just rally behind Altria Group, and I have been beating it like a drum. It is the worst managed tobacco company on the planet. They have failed at every turn for the last decade, whether it was investing in Juul, the vapor side, Kronos, the marijuana market, like you name it, they've touched it, they failed. And I don't know why people love this company so much when I've been watching CEOs and upper management get raise increases over this time. They do nothing but watch their traditional business fail. The Western world is falling, like we're moving away from traditional alcohol and tobacco-based products. The Western world is seeing a double-digit decline of smokers. You see it in the total volume of cigarette shipments from Altria Group because they're only allowed, and they're primarily specified in the Western world. It is a horrible company that all it does is raise prices to keep up, and they do a bit of margin expansion, and that's what makes sometimes their earnings look good as they buy back shares. But it is a terrible, terrible company. Whereas if you look at the global markets, Philip Morris, I prefer British American because of the foothold they have in the global markets that are still expanding in this sector. They've done much better with the vapor market. They've proven that they have better penetration with their products, and they don't have to deal with the same regulatory effects that we've had to in the United States. So again, my parents won the lottery with this one because my parents, they smoked, they did stuff throughout their life. They mostly quit, but I'm like, you need to make some money back on this. So back then, I think British American was yielding something like 10 or 15, like some god awful dividend where people would be like, that's a trap. And I'm like, I don't think it is. Let's buy a bit of it. It's at a good value. People are just hating on the sin sector. Forget the other ones. Just buy this. Well, they're up like, I don't know, 30 or 40%. They locked in like a 10+% yield on that. They've done very well with British American. But yeah, I don't personally own it either, but I do like that one. And I wish people would just do a bit more research because I hate listening to people that love MO. I'm like, why? Why do you love such a terribly managed company that is failing.
I've never heard someone who knows so much about the tobacco sector in
I
investing.
I will say I've made a lot of money off the MJ space because when I started investing, the first stock I ever bought was a company called Canopy Growth Corp. And that thing, I bought it before legalization in Canada, and that stock went to the moon. I mean, as a young investor, and somebody that was making less than like around 40K a year, to have an
Mhm.
investment that like annualized like my total salary in a year just kind of blew my mind. But I remember because that got bought out by Constellation Software, and I remember arguing with my mom because she rode that thing way higher than I did. We were both invested in it, which was hilarious. But I remember just thinking like this entire industry is going to blow up. I'm like, there's no moats. It's highly competitive. They're letting your grandmother grow it in the backyard. I'm like,
Right.
there's nothing about this industry that screams that this should be trading at these insane valuations. But again, we were buying it for $1 before anybody cared, right? And then I saw all of a
Yeah.
sudden, oh my God, all the big tobacco giants are getting into it. And like, I was hyper fixated on it because I'm like, this is going to get real bad. I'm like, there's no way this is going to work out for these guys, right? And then everyone was just, and this was the same time Jewel was falling apart for them. But I was invested in MO, I think years and years and years ago before like I started, because again, I pay attention. If you're holding individual stocks, you have to know what you hold. You have to
Yeah.
listen to those earnings calls. You have to pay attention to what they're investing in. Are they giving you a good capital return on the investments that they're spending your money on? And I just refuse to believe they were doing a good job.
I like how you said your parents were smokers, so you're like, we got to make some money off of this. So that's how you got invested. You got them invested into tobacco companies because they're smoking. So might as well get some money off of
Look,
the damage.
there's a quote that I really like saying, which is cost average in the many and focus on the few. Because a lot of people like they like to build their own portfolios with 20 to 40 stocks, and I think it's laughable because that's what I
Yeah.
used to do. And I'm like, you can't sit here
Yeah.
and tell me you know how a hydro company operates with a nuclear facility to how a tobacco company. It's just basically what do you understand, right? And for my parents, tobacco is a very easy to understand. It's very addictive. It's very hard to like. You understand the market exceptionally well. So let's just find based off fundamentals, market conditions, what the best one of these companies in the sector is, and then we'll allocate the right percentage in your retirement portfolio, right? So
Okay, so that brings us to the next stock, which is using that like that thing you mentioned of investing in what you understand. Meta Platforms, Meta. This for me was probably my best investment or close to my best investment because I'm in advertising. We talked about it. You're in advertising. You know how it works. Meta Platform in I don't know. I forgot what it was now. Like 2021, I think. The iPhone came out and it made it hard to track iPhone. The iPhone put out some software update where it made it impossible for Meta to track iPhone users. So if I want to sell you something and you need an iPhone, it was very, very hard for me to dial into exactly who you are when I'm using Facebook advertising, which caused the Facebook stock, the Meta stock, to crash because that's their number one thing. Your ad revenue is how Meta makes money. So they crashed hard. I think they crashed to under like $100 or something. So I worked in advertising. That's when I loaded up. I threw every available dollar I had at it, and it's at like $600 something now. I don't even look at it anymore. But I'm overweighted in this in my portfolio, but I just keep it now because I don't think it's going anywhere anytime soon. The AI push, everyone's investing in it, so I don't think they've hit their ceiling just yet. So Meta Platforms Inc. I'm just interested. Is this in here for the same reason you had the other ones in there? The other single stocks? So this is the
yeah,
American
so
version?
just a framework because I put Meta and Google in that retirement portfolio. And again, these are just picks that I personally own in my own portfolio. Maybe we can pivot to that a little bit in this discussion as well. Firstly, I think when people look at Meta and Google, they just severely underestimate the fundamental business when it comes to social media. As you mentioned in marketing, every single business, like I work in marketing and I help in IR firms and all this stuff, and it's a lot of older people that are traditionally or they're transitioning to YouTube and social media. People do not appreciate the medium of sale tomorrow is this. Everybody lives on this, and the people that own these platforms will become, again, they are already some of the largest companies in the world, but I still think we're in a relative infancy stage because social media is still expanding so dramatically in a lot of different aspects, and the margins are nuts. And I think YouTube has probably got one of those brilliant business models out there when it comes to not having to generate the content themselves. Whereas Netflix, I think sometime down the road might end up struggling with that because again, the output and I guess I don't like media that much because it's very cyclical in nature. things just ebb and flow. It's really hard. Like Star Wars was popular for a little while. They oversaturated it. Okay, what's next? And it's always this annoying itch of we have to figure out what's next. We have to spend billions of dollars on what next. Whereas YouTube has this brilliant system. And same with like Instagram and these social platforms where it's just like we're always interested in people, right? And these people are constantly generating the content and we're always going back to it regardless. And I don't know, I just feel like these platforms, like you get this beautiful fundamental business that has incredible margins, incredible valuations for the current growth. And then the cherries on top of the cakes are endless because these companies can spend billions and billions of dollars, lose it on all these, potential upsides and still pivot and do all this stuff. And I love Zuckerberg. I think he's probably, again, one of the most respectable CEOs out of the market today. He's still one of the very few Mag 7 companies that has an original CEO, founder CEO. He's got a really traditional home life. Again, I don't know. The guy's a billionaire. He owns like a crazy bunker down in Hawaii. There's some exaggerations there for sure. But I mean, he's got kids. He's still with the same wife. He's like, I have a great deal of respect for people that have, what I would call a stable home life over somebody like Elon, who has got multiple baby mamas in a lot of court cases. It just shows that there's some underlying, I'm a guy, like, I think most men will agree stability.
Psychological profile.
Yeah.
I like psychological profile.
Yeah, well, it depends what you want in life, right? Like, I think most guys just want stability. They want a woman that provides stability in life, right? So you want to come home to a stable environment. You want to focus on your work. You want to have this very stable outcome, right? So I always just look at CEOs and I'm like, what's their home life like and how are they bringing this to the office? Because it's a definite concern if they're not going home sleeping comfortably and they have to take antidepressant meds, right? Like, I mean, that's something you should consider. But yeah, Meta, I mean, my VRs, you can't probably see them on the cut here, but I got
you MetaQuest 3. Add me as a friend. I got it too.
I think I'm probably one of the few people I know that use it religiously. Like I play games on it 3 or 4 days a week. I'm in the best shape of my life.
Sorry, you cut off for a second. Go back 1 second.
Test, yeah, as long as you guys can hear me. Yeah, I'm in the best shape of my life because of the Quest. I can't express to people, like I've been using it probably pretty consistently now for at least 3 years. And like a lot of people, when they see me without my shirt on, they're like, how often you go to the gym? And it's kind of embarrassing because I'm like, oh, I just play games. And they're like, what do you mean you just play games? I'm like, you don't even feel like you're working out, but I play like, there's games like Population One. They're very like, I love paintball. Yeah, I love paintball growing up and I love like airsoft and all that stuff. And I'm like, I wish I could go out and do it more. And then when I tried it on this game, I was like, holy crap, like this is the next closest thing to like real life airsoft where I'm standing, I'm sweating by the end of this. And like, I don't even feel like I'm working out. I got to the point where I put a weighted vest on and I'll wear like weights just to kind of push it a little harder. But yeah, I got shredded doing that. And I'm even shocked at like, Jesus Christ, like, it's kind of funny, but I love it.
I'm happy to meet another person who uses it. I play Population One. I also use it for like the art apps and stuff. I like drawing on it and all that stuff. I use that big screen app, that one. So I have my Disney Plus account. I have all that stuff synced to it. So when my wife is watching the Real Housewives of whatever city, I can just sit there and watch like Disney Plus on my own and have a big screen experience and all that stuff. So I use it for like entertainment plus video gaming. I love it.
I hope it adopts a bit more. I feel like they're struggling in that aspect because I do love the technology. There's a lot of verticals they have to overcome. Like it's hard when you first start using it. You get vertigo, like some of those things you have to adopt to, and a lot of people just drop it there. And it's obviously, I think, one of their struggling markets right now for them. But I hope it persists because I have a deep level of affection for it.
So, that actually loops into why that stock price crashed. So when the Apple update came out that made it harder to track Facebook users on, like Apple products. This was also when Zuckerberg was coming out hard and promoting VR, but like the metaverse, and like, hey man, his eyes off the ball now. Advertising where they make their revenue, so they pivoted back to advertising. Everyone got their trust back. Their margins never changed. Their profit never changed. Nothing changed, right? He said, hey, I'm back focused again, and then everything skyrocketed again. Nothing changed. That's why I bought into it. I was like, they're super profitable. Like, do you not know how many companies are dependent on the Meta ecosystem to stay afloat? Small businesses rely on it for advertising. Like that's the only way. Instagram, Facebook, all of that. And which also leads us into Google. Same reason why Google is a good bet. And that's what you have here for 1.7% as well. You have Alphabet, which is Google.
Yeah, so that's kind of the retirement portfolio side, and it does bleed a bit into my own. I think a lot of people would probably want to hear how I'm investing at 33. And when we're talking about Meta, I kind of get a little nostalgic and annoyed because, man, when 2022 hit, that market crash, and I knew like it was going to get bad because fundamentals were shifting in companies. If you go look at any major tech company during that period, revenue started to flatline, earnings were going down because they were spending so much capex, and then all of a sudden they had to pivot from spending to adding it back to the bottom line because investors went back to the mindset of, oh shit, fundamentals matter, and that's what caused the rebound and the relapse and things like Meta that dropped upwards of 70%. I recognize this pretty early, and I think during that period I was still mostly in individual stocks, and I'm a guy that will never be out of the market. Like, I don't care if the market's crashing, I'm cost averaging, I'll get more aggressive. But during that period, I didn't know what was happening fundamentally to these companies. So I said, I'm going to sideline and I'm going to put all of it in the S&P and I'll see how it goes. And I felt really bad because like I was fighting this with my wife, and my wife's like, I'm not selling Meta. And then I watched it drop like another 50, 60%. And I was like,
That's when I bought.
yeah, so I was like, fine, like it's not the biggest position in our portfolios, like hold it fine. But I was like arguing with her about it. And then when that thing came rocketing back, she still endlessly reminds me to this day. It's the third largest, or we have three stock picks for the most part in our combined portfolios that make up I mean, it's about six figures worth of value in three companies. And that is just Meta, Google. And recently I took on a position in Take Two that I got kind of aggressive with because of GTA 6. That one I kind of have a love-hate relationship with. It's a very weird one for me because it's way more speculative than I usually want to take on. Mind you, I do have some small caps as well. That's a whole nother realm of discussion we can kind of brief on. But yeah, I mean, it's hard finding, like, because I like Microsoft, I like all these companies in Amazon, but man, like, when you're making these individual bets, I like to concentrate and just really focus in on them where I think the highest rate of returns are going to be. And I don't know how you don't look at Meta or Google and sit there in utter awe of the ecosystems these companies have. And I think Google, everyone keeps thinking search is dead. Sundar Pichai keeps saying that search is going up, which I find very kind of counterintuitive because all the media keeps saying search is over. Sundar says for every one person searching, they're doing like way more searches than normal because they're finding it more useful. So I don't know how that translates to dollars because we don't actually get to see the real metrics. If you go on some apps on Google, it'll show you like the search platforms, and Google's been ticking down slightly. But that doesn't take into that, those are just against Yahoo and Bing and all these dumb other platforms. It doesn't take into consideration ChatGPT, Gemini. Like, you don't know where these search results are moving to.
That's what I was gonna say. They're monetizing the AI search algorithm, so it's not a big deal. Everyone's just pivoting. It's just a transitionary period. Don't even worry about that. Like, you think Google's gonna just let it slide and be like, we're gonna not be market? Trust me, they're on it. And everyone's gonna monetize. Gemini is gonna get monetized properly. ChatGPT gets monetized properly for search. You can make sure that you start ranking on stuff within ChatGPT for SEO, for Gemini. You probably start be able to serve ads properly within those platforms as well. It's not a big deal. I wanna mention that thing you're talking about. I love talking about this though, the Meta thing, because so what happens is the only reason I bought and during that crash was literally during that period, I was managing millions every month in Meta ads for campaigns. I was managing millions in Google every single month. Like, I was building it from scratch, managing them, doing all this kind of stuff, like me and my team. So I knew, I was like, this is not real. None of this is real. And I was managing across different sectors. So I knew it wasn't just like all the industries are fine. Everyone's spending a ton of money. And the main thing was these advertisers had nowhere to go. That was the big thing. I'm like, if they're advertising for more expensive and the tracking's weird on Apple apps, it's like, what were the alternative? They had nowhere else that was still going to give them the same returns they would do by running an Instagram ad, by running a Facebook ad, right? By running all this. That's why I kind of moved all my chips in and went, here you go, when it was just going, and then went right back. I'm like, I'm a genius. But if I wasn't like literally in that ecosystem hardcore, I would have never done that. But I was looking at it like with my eyes. I was like, I can see that this is not real. And I can see that nobody has anywhere else to go. They can't just like turn off that pipeline and that campaign and go move to another platform because all their business will shut down. Their margins got a little bit tighter, but they're still profitable. So I was like, everyone's going to stay here. And that's it. And so that was the only reason. So I get why you didn't do it. I probably wouldn't have done it either, but I was so involved that it was like, for me, it was a no brainer.
Yeah, and it wasn't on like this was when the downside trajectory just started, and we still came out of it fine, and I've gotten way more comfortable. And again, that's where I kind of came to that thesis of just, cost average into the many and focus on the few. I just want to go back to Google for a second because I have a fundamental thesis on that one, and I think the biggest thing holding Google Google back is just their court case for the monopolistic fine, which I don't think is going to turn out as bad as the media and the clickbait articles love to push for it. But I think what people are missing with Google fundamentally, there's like two aspects to the business. The first one is the traditional business is still growing quite nicely, and I think they're going to pivot into a more Microsoft-like business model because everyone's using VO3 right now. I'm sure you've seen they're going super viral. These animal vloggers, they're
Yeah.
hilarious. We talk about them every day right now, and I'm like, there's going to be so many advertisers. Like, this is going to replace so much business, and they're charging $250 a month for it, and that's just for that. Like, there's a whole suite of software you get with that. That's just one aspect as the video creator, and I think that's going to. I'm hoping on this earnings call, people are going to wake up and they're going to be like, oh, we have 500,000, a million users at $250 a month already, and people are going to be like, oh crap, this is more like a Microsoft like business. It's like a subscription, software as a service model. We can give them a new multiple, right? Because Google's trading at like what, a 19 right now, which is almost laughable. They should be closer to maybe where Meta's at. And I think they should be trading at a 30 times multiple and be the largest company in the world today, because I don't know how Tesla, a company that everyone rallies behind that hasn't proven out any of their business models yet, whereas Google's forefronting a lot of the same technologies, but they have it out in the wild already that has been working for 5 years. And I hate how people seem to think that Tesla's just going to come out and dominate the robotaxi sector. They're just going to be like, oh, snap of the fish,
I
they're
think
going to
that's what it
crush
is.
Google. But
Yeah,
it's
that's
like,
what it is.
if they have to go through the same regulatory environment, like Google's been here, they've been here for years, and like you got to ask yourself, Google at any time could do 10,000, 20,000 cars. Ask yourself why they're not. And it's not because the software is not good enough either. Like, you really have to take into consideration that is a lot more complicated than, oh, Tesla's the best. Tesla's just going to come in and there's going to be 20,000. You're going to flick your switch and every car's a robotaxi. Google's laid the groundwork. Google is the leader in this business model, and Tesla is just dipping their toes in, and it's not going to be anything that Elon promised. And people are going to have to wake up to that. And it's going to be a slow grind for the next 5 years as these things start to build themselves out, right? So I don't know how Tesla can demand 100, 200 times multiple, and Google doesn't even get a hint of any of their future upside in these businesses, which we're not saying one's going to be better than the other. There's huge market share for both these companies, and there's no competitors. I think there's only 3 or 4 total
Yeah,
competitors in the self-driving space right now. So like,
yeah.
why shit on one or the other? But you can't deny that Google leads these industries. Like, they've been through the regulatory environment, they have the cars, and I like the redundancy. People are like, they're ugly, but LiDAR works. It's safe enough to put into the wild today. Tesla's vision isn't perfect enough, or it would already be in the wild, right? Like, and it's not. So it's still getting there. It's still getting there. So I love Google. I think most underappreciated company.
I want to talk more about Google. I'm just going to wrap up our little thing that we had. So we talked about a total $1 million invested, came out to annual dividend payout of $41,000, which is total monthly of $3,438, like the thumbnail and title told you. So there you go, guys. Okay, I want to go back to Google again. So let's talk about your portfolio now, your personal portfolio. I'm getting a sense of how you invest, just sort of talking to you now. I'm heavy on Google. I'm overweighted on Google, and I'm overweighted on Meta. I might just have to get rid of some of that stuff just to like not be so overweighted on that. Like, I'm way overweighted on these two, but I bought them both during their dips, their massive dips a few years ago. So I'm up a lot on both. The only time I've even bought back in, I didn't buy back into Meta during April when that, because they didn't really have that huge crash like everyone else had. But then I did buy back into Google a little bit in April. So I love Google basically for all the reasons you just said. And like, I'm a firm believer. So when I buy single stocks, I look for two things. I look for, can it beat the S&P 500 over the next 5 years, ideally? And do I have a deep understanding where I could school anybody on it? And am I in its ecosystem? Am I using it? Am I actually a consumer of whatever this thing is? So Meta and Google advertising, I'm using it. Google and Meta, I'm in their ecosystems. VR, me and you, we have a passion for VR that's not reflected anywhere else. Maybe just me and you. I love this so much. I bought Unity. They're a VR video game maker, right? So I was like, I gotta invest in. I love it just to show my support. And then Also the Google ecosystem. I got an Android phone. I use the Google Business Suite for like all their products. I use Google Notes to take notes. I use Google Keep. I use everything. I love Google. I love everything about it. It's my Coca-Cola. Warren Buffett has Coca-Cola. Yeah. It's my Coca-Cola. I love it. I'm passionate about it, but I still buy on dips and stuff. Like I don't just keep buying it. Talk about sort of your investment thesis. A little bit more about Google if you want. I just want to hear because I heard something you said. You look for, I'm going to get this wrong, so just correct me. Something like 10% returns, 4% of those being dividends, or something along those lines every year.
In the retirement portfolio that I advertise, I don't care about dividends. My wife and I's portfolio doesn't yield much more than I think just under 2%. Which is, it's a nice bit of cash flow, but again, we're not utilizing it, so I don't really care. It's just there, so I have some reinvestable. I like having a bit of cash flow for when the market dips. There's nothing nicer when the market goes down. You have some consistent income that you can combine with your working income to really drive down into those lower market periods. I found that I'll kind of framework my portfolio first, and then kind of talk about some of the strategies that I implement to outperform that have worked favorably for me in the past. But at this stage, and again, I didn't used to be like this. This is a decade of investing and evolving and getting to $1 million and all this stuff. But ideally, the point is that I like focusing most of my money in index funds. At this point, I just started buying XQT and some of the global market funds. They're still very small percentages, but I do like the idea of wealth preservation as my portfolio scales. But at this point, like we're about 50% the S&P 500, very easy. We've got about another 20%, 25% sitting in the Canadian markets just to collect some cash flow, and then a little bit more into XQT. And then about the other 20% is just purely in individual stocks. We're a lot younger. I feel a lot more confident, especially because we've been very fortunate in the markets, investing for a while. Like we can take on a bit more risk than maybe the average investor. And then I also have what I would consider in that 20%, what I call my long shots, which are some more speculative, smaller cap companies, some of which I do tend to work with. These are a whole different basket that are highly scrutinized. Obviously, small caps are very kind of, I don't know, they're shunned a lot in the current market environment, but I do find that if you find the right companies and you work closely with them and stuff, that you can still see some pretty excelled returns in those with very small amounts of money. I call them kind of long shots because you put a little bit in, and if it works out, that little bit goes a very long way. And if it doesn't, you don't even notice it. But yeah, and I prefer, and on YouTube, most people are excited because they don't want to talk about global market funds or VT. That stuff's boring as hell for most people. But yeah, it's that 20% that I love to focus on. It's where my passion is, like you. I like finding things I believe in. And the only two strategies that I'm able to implement that have worked successfully for me and outperforming is I am excessively good at very volatile market and chaotic market events. A lot of people, and I've said this time and time again, when my family and my friends are calling me about what the hell's going on in the market, that has always been the best buying indicator that has made me. We recently, just over almost a couple years ago, bought a condo in Toronto. And the only reason we were able to afford this was because of the pandemic. And I lost my job in the pandemic. I was one of those people that got royally screwed. I was very fortunate because, well, I'm not married. I call her the wife. We're engaged. But at that time, she had a lot of cash. I didn't have a lot of cash, but I had a line of credit. This is the first time I ever used debt or margin in the market ever. And she was sitting on like a lot of cash. And I was like, this is ridiculous. Like, we're going to go open another brokerage account. We're investing all of this shit this week. Like, this is crazy. The market tanked so fast. And I was just like, oh my God, what an opportunity. So, I mean, we were buying speculative stocks. Like we made 1000x gains on things like really highly speculative investments. She bought her Meta position at the third week of March, the bottom of the pandemic. She's still holding the same position. We built on it a bit more now. But like the stock, we were just buying anything and everything, like indexes, individuals, like just going nuts. And oh my God, leading into 2022, the rest is history. I remember in 2019, I hit my first 100K. And it took so long to get there. And it's crazy that from 2019 to now that like our combined net worth is far surpassed, $1 million, that's Canadian dollars, might not be worth as much in the United States, but to be 33 and to be in such a privileged position and, have an affordable living in a very expensive city feels pretty blessed. But I got to keep reminding people that you get rich when the market crashes. It is the absolute prime opportunity, and people just psychologically can't handle it. And it's why I kind of roll back to what Dave Ramsey says a lot, that most people shouldn't manage their own money. Because I do emotional shit a lot of the time, and I've made some pretty big mistakes selling the bottom of stocks that I shouldn't. Even in 2022, I would have been better holding those stocks, but I recognize that I didn't know what was going on. I'm not comfortable with this. Let's just put it in indexes. Let's ride this, see how it goes. I cost averaged. People forget that crash was really bad. And now we're back in a highly speculative market where crypto, everything's running again, and people are getting very laxed with valuations. But if you remember 2022, man, like SPAC market got destroyed, NFTs got destroyed, crypto, altcoins destroyed. Meta, again, a mega cap company dropped 70%. And you got to sit here and ask yourself, that is the opportunity. Like you, can you recognize the value in the market and get rich off of it? Or are you going to freak out like everyone in my comment section and my family and my friends that are calling me? I want to go in cash. I don't know what's going to happen. Let's sideline this for a bit. And then, as what's the quote? If you miss the handful of days in the market, you miss out on like half the total returns. So you don't know when those days are coming. But what I do know is I have a job. I can make money. I have access to capital. Go nuts. Like, this is when the shopping spree is going to yield the best results. And I mean, same with Meta. Like you just said, you didn't buy the last dip. I bought the Meta dip and I'm already up 30%. Like, when you recognize the value in these drops in this fear, like Google right now, it's one of the reasons that I'm obsessed with Google. It's like the number one position in our portfolio. It's the largest investment I've ever made in my life on an individual stock basis, is purely because it's down a lot. It's too damn cheap. And people just, they're getting caught up in clickbait, because every time I see a clickbait title, the CEO is saying something that's contradictory to what I'm reading on Motley Fool. And you got to recognize too, and I'm sure you live in this environment, that the media, and I work in media, and it's really hard because it is a corrupt, it's a very maniacal industry where you have to understand. I'll maybe broad view this in a perspective that I usually love quoting a lot, which is like when I meet paranoid friends. I'm sure you've met somebody that's fairly paranoid, conspiratorial, right? Like they very like getting into the weeds of conspiracies. And I said, I can simplify the world for you and give you a better understanding about these conspiracies. You have to imagine that everybody has self-interest in some regard. The politicians, the CEOs of these companies, you have to ask yourself, what is their interest in working for these companies? What is your interest working at your job, collecting a paycheck, doing this? If you realize that every individual has some form of self-interest, you can start figuring out what that self-interest is and why these industries operate the way they do. Media specifically is a very easy one to understand. We need clicks. We need clicks to make money. What gets clicks? Not the boring shit, not Vanguard Total Market Index Fund. No, penny stocks. I'm making 1,000x total returns. Let's go. So you got to understand, all of media operates this way. So when Google's under a lot of scrutiny, or any company is, you're going to see the worst of headlines. It's like Elon. He just took a drug test and he has no drugs in his system. Yet everybody at the White House was calling him a drug addict. So it's like, you have to understand, like, people have incentives behind pushing narratives, whether it's to make money or get somebody off their back. And like, you really can't trust any media today. It's incredibly hard. It's one of the reasons that I do like YouTube a lot, but the problem is YouTube has become gamified. It's not like the old days now. And you see it with Mr. Beast. I even see it in marketing and stuff like this. I just saw a video where some guy's like, oh, if you're posting a video to YouTube, here's the things you don't want to do. You don't want to watch your own video because you might kill your watch time. You don't want to buy botted views. You don't want to do this, this, and this. And I'm like, this guy, I can tell, never took the YouTube course. YouTube has free media that tells you how the YouTube algorithm operates. And I can tell none of these guys have watched it. Here's a guy getting like 500,000 views on a video, and I can tell he has no idea what he's talking about because he's never gone to the back end of YouTube and actually watched how YouTube categorizes videos and pushes them out to audiences and what gets videos views. It's just funny to me because like that's the whole YouTube game now. If it makes clicks, I don't have to be an expert. I just got to talk about it. And I do the same thing. Don't get me wrong. I have no formal education, like I grew up on a farm. I was a full-time magician, believe it or not, for like 10 years of my life, for most of my working career. Yeah. So, I mean, I understand entertainment very well. And luckily I was very cognizant with my finances. So those two things translated very well in this industry. But I recognize that like there's so much bullshit out there, and it's kind of toxic for newer investors, and not everybody is mentally prepared for individual investing. I don't think there's something wrong. I don't think there's anything wrong with paying a manager 1% if it stops you from blowing up your account when it matters most.
I agree with you on that. I think because I think most new investors do make emotional decisions and they panic sell on the downturns. I think probably why I know myself and a lot of pretty like ethical YouTubers, we tell new investors just to buy an ETF as well. None of us promote buying individual stocks like, oh, Jesus Christ, they're just going to freak out. or they're going to pick the wrong stocks, or they're going to read something on Yahoo Finance or like the Motley Fool and see a stock getting pumped, buy it, and then it drops 20%, right? Because they got fooled. Like there's a million different things that can go wrong. So when you're looking at your foundational ETFs, what are you using? Is it all US based ETFs?
It's all S&P 500. Like that's half our portfolio. I can't find a better ETF that I like. So the thing is people are like, why don't you buy the Qs or something? And the problem is I don't like the Qs are incredibly concentrated in a lot of companies that I think are incredibly overvalued. I wouldn't be buying Tesla. I wouldn't be buying Costco. There's a handful of companies in there that I'm not 100% sure of. But like you, I have a great deal of confidence in some of these top weighted companies like Meta, like Google. And I would rather just say, hey, instead of putting it into the queues, let's just pick a few of these companies that we really love and hope that it works out. Because again, if it doesn't work out, it's not going to completely ruin our retirement by any means. But I like the S&P though. I love market cap weighted systems. I do not think there is a better system to implement out there, because again, there's no emotion involved, there's no backdating, there's no, oh, value this, value that. If the company's overvalued like Tesla and it continues to be in perpetuity, hey, I'm still going to get the upside from that regardless about how I feel about the company today, right? Because even though companies can, like, look at Nvidia is a great example. I couldn't wrap my head around Nvidia, and everyone called it a bubble, and I called it a bubble because when the stock was going parabolic, there was clearly insider information that you or I did not have. That stock was going up tremendously before earnings, and I'm like, how is this company trading at what it peaked at like a 200 or 300 times multiple? I'm like, how is this even possible? They don't have the growth to justify it, and then somehow in the next 2 quarters, every time it was doubling its earnings. I'm like, how is this company doubling its earnings every quarter? That doesn't make any sense. I mean, like, so I would have missed that completely, but because I hold the indexes, which you might recall, I think the S&P, most of its gain that year came from Nvidia, which was like, and I would have missed it completely because I just couldn't wrap my head around it until after it happened. And then like, so you can't, know all that stuff, and you don't want
I
to
was
miss
in the same boat as you with Nvidia. I didn't understand it either. I was like, "What's happening here?" So I didn't buy it. I was like, "I don't want. If I don't get it, I don't buy it." And then so is it VOO that you hold for your S&P
Yeah, and
500?
I hold it in US dollars and US accounts, so I don't have to worry about dollar conversions or this or that. I like having I've been really debating, and this is just because of my pure paranoia, is opening up multiple currency accounts and buying international stocks, either through emerging market ETFs that are fixated more on other currencies. So like I would love to buy some European companies. I do love I was really kind of, I haven't bought them. I like looking at them like Nestle and Hershey. I haven't looked at them recently, but they crashed so hard. And I'm like, I would love to own those things in their native currencies.
It's like buying it on like the London Stock Exchange or something, you
Yeah,
mean?
I love multiple currencies because as a Canadian who travels quite a bit here and there, like I recognize that the one of the biggest double-edged returns I ever had was putting all my money in US dollars and US dollars accounts. And I did that very early on in my investing career. And the dollar, since I've been investing over a decade, has dropped tremendously. So, now it's a bit of a concern because the US dollar is starting to drop. So if you're just investing now, you might not see the best return because the US dollar, I think, has already dropped 5 or 10% or something. So it really sucked if you caught the top of that buying Google or something. But again, I'm a long-term investor. I don't care about the short term. What I do care about is, again, preservation and diversification. And I recognize that currency risk is a big deal. If you live in Canada, you've experienced currency risk. Canadian dollars dropped tremendously over the last decade. So I like the idea of having multiple currency accounts and generating currency from around the world. Because if you live in Canada, I always say Canada wants you to be rich. It is the easiest country to make money globally and not get taxed on it.
That was my next question.
Yeah. Sorry, what was
Talk
that?
about that. If you're going to buy like something in EU, in a euro and London Stock Exchange, I don't know what the currency works like there. If you want to sell it and then use that money and then
So
sell
here's
it and then yeah, what's the process there?
I'll just break it down real briefly. You need a proper brokerage account because I don't think Wealthsimple does this correctly yet. They're still evolving. Royal Bank I found to be the best for my corporate account because they don't charge on conversions right now, and they actually allow you to open up multiple currency accounts. And the best thing about it, and yeah, and I'll say this from a personal perspective, as somebody that sells digital products to the US, I don't know how it's criminal that this operates the way it does. Because in Ontario, if you run a business, you get small business tax credit, which means on the first $500,000 earned, you only pay like 11%, but you have to charge a service tax, which is 13%. So realistically, the total tax is like 23, 24%. That service tax is really annoying. However, in Ontario is one of the few provinces that forces you to implement that. It's the HST. But if you do sell digital products globally, guess what? You don't have to deal with tariffs. you don't have to deal with anything. So if you can sell a digital service in the United States, get paid in US dollars, in Canada they don't, or Ontario, you don't have to pay the digital server or the HST. You don't have to pay that service tax selling to the US. So if you get US dollars, now you're saving that 13%. And then on top of that, like you can keep the US dollars and you don't like it's so much more tax efficient and it's so weird that you don't have to pay the IRS. It's such a perplexing thing. It's kind of like collecting US dividends in an RRSP. Like you're not getting the 15, you don't have to pay withholding tax. Like if you self-employed person can sell a digital service to the States, you don't have to pay withholding, you don't have to pay the IRS, you don't have to pay in Ontario this service tax, and you get to keep the US dollars and pay like 11% on it. It blows my mind that that's the reality of, and it works similar globally. It's really perplexing to me that Canada somehow has got this set up this way because you can do the same thing in your portfolio, right? Like if you go to Royal Bank and say, hey, I want to open up a multiple currency account, convert your Canadian dollars to US dollars, to euros or pounds, and then go on those market exchanges and buy those stocks, you'll get paid in those dollars. You'll be incredibly diversified. There are different tax implications you have to consider. But in my position, as my portfolio scales, I just like the idea of having that preservation. And because I've been to Europe, I'm sure you travel. If you travel around, it's nice having access to multiple currencies. And even in Canada, you can spend US dollars. You can spend US dollars globally. You do not need to convert them back to your native currency. And people don't understand that either. Like I can pull US dividends right out of my US account, put it into a US savings account, get a US credit card here, or even just pull it out as US cash, spend it as I please. I can go to McDonald's here. They'll take US cash. No one's stopping you from spending it. Like Canadians, I mean, have you been anywhere globally? Like if you go to like Turkey or any of these other countries, they want US dollars. They'll do anything to get their hands on it. Like, so as a Canadian or somebody living abroad, like it's a really interesting investment style that people don't consider very often. And again, I'm in a privileged position where my portfolio is big enough that this makes sense. I consider like there's like a few levels of investment class that you need to work yourself into if you want to become highly wealthy and successful. The first thing for Canadian, you're Canadian, yeah, you're in Vancouver, so you understand like TFSA, RRSP. And now we have FHSA. If you haven't utilized those accounts before thinking about doing anything else, you have to max those. There's nothing better than those accounts. They are the path to preservation, to the promised land of tax-free income, perpetuity for the rest of your life. You have to max those. The next step from there is understanding sole proprietorship or opening up a corporation and doing a side hustle. People need to understand how write-offs work. It is the most valued thing you will ever do in your life because I write off part of my property, our food, our phone bills, our internet. I can't express to you how much money I save not paying tax on those expenses. Whereas the average person in their mind is like, oh, I need to go buy $1,000 phone, and they're doing it with earned income, which is really dumb if it's an employment income because now you have to pay probably 30% on top of that. So it's $1,000 phone. Well, now you're paying $1,300. In my corporation, I make the money, I spend the money, and I pay tax on whatever's left. So this phone, if it's $1,000, it only costs me $1,000 because I need it for my business. So I save $300 in taxes right there alone. And that gets that adds up to thousands of dollars if you own a property. I mean, I'm writing off property taxes, interest expense, phone. Like again, it equates to so much. And then the final boss, as I call it, which is really complicated and it's taken me a long time to learn, is corporate investing. That is a whole realm of a whole new.
You have such. Check out his channel. I was watching last night. Corporate, maybe it was your corporate investing video or corporate tax video. I love it because no one's making this stuff, man. I saw your video and you're talking about, I think it was corporate taxes and corporate investing, and you're talking about the write-offs. I was like, I loved it. I loved every minute of it. It's like a 10-minute video and you're going through it. It's super educational. It's kind of touching upon a little bit what we said, but my God, you need to make more stuff like that. I loved it.
Greedy, or they think I'm trying to teach them how to because I always say, oh, like tax loopholes, and they think I'm trying to swindle the government. I'm not. People have to understand that the middle class subsidizes the rich. And if you want to do yourself a favor, and Bassam always talks about this too, go on to the Wealthsimple tax calculator. If you make $50,000 in qualified dividend income, you don't pay any tax on that. You pay very little tax on investment income.
Sorry, one thing I was thinking, I was like, okay, why don't people make content on it? I think it's because people are thinking, oh, not enough people have a corporation that they can use those loopholes on. But you said something in your video. You said start a side hustle and use that for your corporate income. Everyone can start a side hustle and then funnel that money into the corporation, and then you can start writing off shit.
You can be a sole proprietor, right? You don't have to start.
But
Corporations are very
yeah,
technical, and they people think it's expensive, and I had to do it the hustle way because I was cheap and broke at the time. But yeah, I went through all the loop, like not the loopholes, but the hurdles of just not going through a lawyer, opening all this stuff up on my own, talking to bank advisors to walk me through it. It is a bit technical. It is a lot of paperwork, but it's weird how it also separates liability too. I think it's good to sever liability because corporations are considered third entities. So it does remove a bit of liability. However, like you said, I don't think people realize like because they said, "Oh, well, you have to make money in your corporation." I'm not, or you have to make money in your business. I'm not telling you to start a side hustle to rip the government off. I'm telling you out of your own, like you should do a side hustle. You should do something you love and try and make some money at it. I'm not saying do it to take the tax advantages. Like go start dog walking, window cleaning. Like there's so many the social media, TikTok, you name it. You could easily make money off affiliates. It's the easiest thing in the world to do. And if you just make $1 off an affiliate promoting a TikTok or something, boom, you're starting a sole proprietorship. Start writing your stuff off. Like, I mean, there's so much stuff you can do, right? And it's not that hard. And I think it's a very inspirational and you want to teach your kids that too, right? Like you want to have that understanding of how businesses work. So when you go and get a job, you understand the levels of how corporations work. Like you need to know this stuff because the information is infinitely valuable to your financial future and your employment future. Because I don't have anything against salaried income. I have a salary income. I think it's important because you want to pay into CPP, but there's a limit to how much you want. Because once you get over that 100K mark, it's just it doesn't become worth having a salary anymore. It just you lose half of it to the government, and at that point, you're better off using the corporation to make another $500,000 and pay very little tax.
there's a lot of good reasons to have a corporation outside of just writing stuff off. You said reduces liability. You can put, well, I don't suggest dividend investments in corporations, but anything with capital appreciation under your corporation.
I think it
You can,
depends.
yeah.
Because there's the passive income tax a lot of people equate to, but you have to be making over $50,000. So you do have to be careful with the capital gains and dividends you take. But from my understanding, I think a Canadian corporation paying a dividend to another Canadian corporation actually completely waives any tax because one
Really?
corporation already paid the dividend tax. There's a lot of weird shit that I've read into. You really got to talk to a financial advisor or an accountant just to get a full scope of it. I don't use my corporation for dividends. I like just, and again, you could also, if you get rich enough, and anybody I know that's worth more than $10 million, they don't spend their assets, they spend debt, which is a really weird thing that I'm not comfortable with. But anybody I know that's worth more than $10 million, it's cheaper for them to use credit and pull out equity, or not pull out equity, but use debt and then use the equity to finance the debt because it's cheaper tax wise to pay the interest expense than it is to actually pull off the investments. Like I said, you open up a whole wormhole of like incredible tax loopholes and weird ways to not pay tax. That's why the rich don't pay tax and the middle class kind of subsidizes the rich. But one of my funny anecdotes, it's different in the States. I imagine it might be different province to province depending, but realistically, what I like to joke about is if you love your wife, it's way easier to gift her your shares if you pass away than it is to sell off your TFSA and RRSP and transition that over. Because you can give her your shares, and guess what? There's no taxes. She owns all the corporate assets, and she can pull it off tax efficiently as she needs. But if you don't love your wife and you do get a divorce, guess what? That corporation's a separate entity, right? It's different here in Canada because I know in the States, like sometimes your wife can kind of get drawn into the corporate side of things if you're not careful. But I'm pretty sure here in Canada, like that corporation is completely separate. So it just comes down to who owns the shares, right? And that's who's entitled to the most part. So I'm like, and same with charities and stuff. There's so much stuff you can do, because what a lot of people do to rip the government off, and I don't recommend this, is you open up a charity corporation and you pay yourself a
Yeah.
salary from it, and then all the money that you're making you funnel into that charity, but you're employing people and you're spending money on like administrative costs that are really just going back into your own pocket. Like there's so much corrupt shit people do in the world of corporations and corporate investing, man. Like it's a wormhole everyone should go down. It's effing wild, man. When you really
Can you make more content, please, on that though? I would appreciate it, to be honest. I know it might not be like the best for like views, but
I
Jesus
get a
Christ.
little scared because, like, honestly, like, I'm not an expert on it. I have a good understanding of some things about it. I know Bassam, I've talked to him a lot about it. He's actually licensed or was licensed in it. And I'm always a little bit scared because I don't want to draw the line because I really don't want people being like, oh, like, call the CRA on this guy. And I've been audited multiple times already, which is super annoying. Not that I
Yeah.
owed anything because I'm a super honest guy. I'm like, I'm not trying to rip the government off. I'm just following the rules as I know them. Here you go. I've been audited for the last 2 years, and they're like, nope, you're good. You don't owe us anything. It's fine. So like I'm not doing anything illegal here, folks. Like
Yeah, with my corporation, like I do a little bit of research myself, but I'll be honest, I went through accountants and lawyers and like I couldn't take a risk of anything being set up wrong, anything being filed incorrectly, like all that stuff. I'm just paying people too much money to do it all for me
that's the
because
scary thing. Because people think
because
they
I can't mess around. Yeah, yeah,
yeah, people think they have to do it that way, and depending on the business you're in, you might have to. But I think in total,
yeah, I do.
for me to open up my corporate account cost me like 300 or 400 bucks.
Yeah, yeah. Opening it up is, but I for me like managing everything that goes on in the corporation, I kind of just have
Yeah,
lawyers and accountants looking at it just because when there's a certain level of money flowing through, it's just like I'm not mess. I just don't want to make sure anything. I don't want to be in trouble for anything, so I literally have the accountant looking at it. Anything legal, I have the lawyer looking at it, and I just sort of like stay
yeah.
out
I
of
don't
it.
recommend opening up a corporation unless you're making 50 to 100K to start, because like you're gonna go from paying like 80 or maybe a couple $100 in your traditional taxes to like over 1,000 instantly. Because
Yes.
like you can't. It's sad that you have to have a CPA sign off on a corporate finances before you can file to the CRA. Like by law, a CPA has to sign off on it. So it's kind of annoying that way, and I don't think it's really hard getting a CPA under $1,000. And I do all the work myself too. I'm a guy that just hands them the final finances because, man, you could spend a lot of money having an accountant dig through your books. I mean, that gets really expensive really quick. So you got to be a bit scrappy with it if you're not making that kind of money. And I don't know what position you're in, but when I started my corporation, I was
I
doing okay. I wasn't doing great. Now I'm doing a lot better and I'm making six figures, but I wasn't, before.
Yeah, I have the accountant digging through my books. That's where I'm at. So everything's being looked at. A lot of it's synced up. A lot of it's digital. So the paper trail is pretty digital. So they're sort of seeing everything I'm doing in real time. They're seeing all the transactions and everything. So that makes it a lot easier. At least nowadays it does. I think for people starting though, you mentioned sole proprietorship. It's been a while
Sole
since I've done
proprietor is
sole
cheap.
proprietor.
It's
That was
easy.
easy. I remember that. And I used to do that myself. And there's something in Canada where if you make under X amount of dollars, like 40,000 in your sole proprietorship, you don't even have to register for like a GST or something
Yeah,
like that.
under 30,000. So another weird loophole that I kind of take advantage of is if you make more than 30K in an individual year, you have to pay HST. HST
Yeah.
is annoying. It's that extra 13% if you live in Ontario, depending on what province. But like for my wife, because she helps me out a bit, I'll pay her out of my corporation. So she gets a bit of side hustle income so she can do deductions against her expenses. And then on top of that, I don't pay her 30K so she doesn't have to pay the HST expense. So we keep it under that 30K limit, though. Yeah, there's so many things you can do with it, man. It's kind of wild. But I want to talk because when you're talking about the accounting side too, I wouldn't mind kind of getting your perspective on the new onslaught of AI because this conversation it's resonating deep within my soul. I have a lot of philosophical debates about what the future looks like if it's going to be universal basic income. I mean, people don't recognize that we are shifting to a new world, and one of the reasons that I'm so cognizant of just trying to get wealthy now is because I don't trust my business, I don't trust where the world is going, and I don't know what it's going to look like when I think more than half of jobs over the next 10 or 20 years are going to be replaced by AI. And I make a really kind of, it's a crude point, but I think it's a very prevalent point that there's two industries that represent massive $1 trillion industries in America. Truck driving is the backbone of America. I think it makes up over 4.5% of jobs. And the porn industry, I think that's $1 trillion entertainment industry. Both of those today, I believe, can be wiped out by AI. And when those two industries go away, in the sense of how they exist today and the GDP that they contribute to, I think will be the initiation of a government step in to start regulating AI. And I really don't know why, because porn is, again, I know it's kind of a crude conversation, but porn is very short form content. It's very easy to run through AI models. Obviously, Google's not touching that, but I imagine somebody in that industry right now is like gonna like is all over it to prompt anything you want, which is kind of disgusting and weird to think about. But I mean, it is a prevalent reality that you should consider because it is the largest entertainment space, GDP wise. And I'm very concerned
Well,
about.
to
Yeah,
see where AI is going, though, if you want to get a good projection, typically when you're looking at porn, it's the best indicator where marketing trends are going. So typically, any way of marketing you see in porn for like pop-up ads and all that stuff, they're actually the front runners in everything. So whenever you see the porn industry adopting anything, it gets adopted into traditional marketing because they're always innovating and adapting the fastest. So whatever they're intaking as far as AI goes, you'll go, okay, that's going to be applied then in every other sector in every industry. It is literally because there's so much money, like you said there, that so much money gets funneled in that they adopt all the new technologies, all the new marketing techniques, everything, see what works. Whenever it makes it to the top of the porn industry of what works as a marketing tactic or for AI, will then get adopted into Apple and Facebook's
Yeah.
advertising and everybody else. That's literally what and no one wants to admit it, but that's what's happening. And that's typically like, all right, we let them test it out first, and then whatever works there gets there. Now, I don't think AI is gonna it's gonna cut off jobs, but it's gonna create jobs. I want to hear more about the truck driving thing really quickly, but my company's called Thrive AI Corporation. So I've worked AI into because we had a rebrand, and because I worked in AI just because we leverage it in every facet of the company. I have not fired anybody. I've not let anybody go. I still got graphic designers. I still got editors. I still have performance marketing experts, except our output is 10 times more.
So
That's literally what's happening. I just haven't had to hire more people and I'm onboarding more people. And it's just output is because you still need human in the loop to some
yeah.
extent.
So yeah,
Sorry.
I think I'm a little bit more paranoid and scared than you are because I think the onslaught of the internet, that though it did replace a lot of jobs, it opened up a whole slew of new jobs because it offered tools that could be implemented in industries, right? And I consider like I mean, I consider Photoshop a tool. I consider like a pen a tool. If I give an artist a pen or Photoshop, they can utilize it as a tool. AI is not a tool. It is a prompt that shits out what a tool is supposed to be useful for, right? And like you said, you're not like hiring a lot of people right now, but you look at any major tech company and they're all doing hiring freezes for the most part. They're laying staff off. There is a massive depression in coding right now in most tech oriented jobs that are software suite focused unless you're highly specialized in an industry. And we talk about this a lot in IR and some of the industries that I work in because I am like you seeing output tenfold because what used to take me 2 or 3 hours, somebody with no formal education, no needing to understand what the press releases are, can use ChatGPT to summarize a script and then use an AI editing software to shit out an entire video. I know people that went into the gaming space that are in a depression because they thought they would had a creative job and now they're just utilizing prompts and inputting pre-fabbed all this stuff that just took two like clicks on a keyboard to shit out. And this is happening in every single industry right now. And I think there's eventually, this isn't going to be like the onslaught of the internet. This is going to be a massive suite of efficiency and margin expansion because you don't need to employ more people. If anything, you can lay more people off. And I think we're just seeing the etchings of this. And the only thing I can tell people, and again, in my perspective, if I had to start over, I would get in a trade if I wanted stability because a trade's
Yeah.
going to be a lot longer before any robotics or AI gets adopted there. But I would, if I wanted to get rich off this stuff, I would really be leaning into what you're saying, finding something where the output can tenfold and finding a way to bring it to an industry that hasn't adopted it yet. But the scary reality is I just don't think it's going to, I think it's going to lead to, I mean, there's a lot of reports coming out by 2027 that 20 to 25% of jobs are going to be cut because they are blue collar jobs that are data entry jobs. And there will be no need for data entry or blue collar basic, moving
You're
some.
right. You're
Yeah.
right though. Okay, I'm going to try not to be all over the place with this because I have 1,000 thoughts when it comes to this. So I'm going to try to stay on track as best I can. There's always something I get reminded of when I think of AI and what's happening right now. It's the turn of the century, 19th century, the biggest industry, if you can name it off the top of your head. Can you think of what the biggest industry was? I'll tell you to see if you can think of it.
I'd like automotive or,
It's whaling.
oh, you're going.
Whaling, big turn on the 19th century. Want to why? They're using that oil from the whales to light candles. But then automotive happens, electricity, light bulbs. It wiped out the biggest industry in under like a couple of years. It was under 5 years. I think it was something like 3 or something ridiculous. Someone can correct me, but it was very fast. Switched over. Everyone went, oh my God, we're all screwed. All these whalers, the ship industry, everything tanked. But then electricity came and everything's automated with light bulbs, candles are dying, a whole new industry. It was a giant shift. Now, AI is different, right? Because this was a transfer of jobs and skill sets. We're talking about replacing jobs. So let's be brutally honest. What's happening right now? Think through this for a second. So all the admin work in general is being replaced and dialed out. I don't remember the last time I did some admin work, unless I'm going out of my way to do admin work. I do not hire for admin work anymore. Anyone who was doing admin work with me is no longer doing it. They just leveled up into something else that moves the needle more, right? So I agree that's done. If you hit the nail on the head with trades, I think whoever that guy is, the godfather of AI, I don't know his name, he's some older guy. His thing is if you want to have surety of like have a job in the next 20 years, become a plumber.
Yeah.
Now, a couple of things about the trades. Trades have always been the best jobs for job security. They will always be the best jobs. I think if you're in the trades, that is for me, if I'm in the trades, I can go to bed with peace of mind every night. I think that's the best part of being in the trades. You're like, great,
Yeah.
you make good income. And
For
you
now.
never like stress about it. You're like, everyone's gonna need me no matter what. Right? Like no matter what. Like there's a guy I went to high school with. He has a pest control company, right? His name's Joey. He Victoria, BC. Give him a little plug here. But I think about him. I'm going like he's a fantastic guy. He's pest control. If that's a trades company, everyone's gonna have bugs. They all know him. I know for a fact in 30 years, this guy's gonna have a successful pest control company in 30 years. AI ain't gonna take that out. They like him, the human being. They like his service, right?
See, I'm still
That's
not
good.
so confident. I 30 years out, I'm like I said, I see what is going on with AI and robotics today. I think the robotics side is going to take some time, but if humanoid robotics get to a level of scale, and we're already seeing it in manufacturing, like a lot of, I think the idea of humanoid robotics is almost dumb because you can specialize robotics today that could replace every McDonald's employee. You could have specialized robotics in machining when it comes to building these stackable, warehousable homes that they're doing right now, the modular homes. That's the next big wave of affordable housing, and most of that is going to be automated anyways. I mean, every industry I look at, I can see sometime down the road, some are going to be longer when it comes to plumbing and that stuff, but still, to some extent, when you start building homes in a more mechanical way, you start seeing how, you need less and less employment to do those jobs. But again, I'm just scared because you look at those, again, you look at porn, you look at truck driving, you look at administrative work, you look at 25 to 50% of the population in the next 10 years is going to be unemployed if we don't regulate it. And then what are those people going to do when they're not specialized in any of these industries, right? Like you're going to see half the world's population. Now, here's the other funny thing that I'm like, it's a very philosophical debate because you have to ask yourself where is your place within the world? Because I feel like capitalism helps you fulfill the metaphorical needs of providing for family, society, building, and getting fulfillment out of work. That is going to slowly start to go away. But I think at the same time, what's the benefit in it? I'm hoping the benefit doesn't become some kind of corporate greed where like you see a few corporations, which we're heading to a monopolistic society anyways. I mean, that trajectory hasn't stopped by any means, but it is what it is for now. But I'm hoping what happens is the world continues to globalize and we lift out the entire world out of poverty. But I don't know what that looks like either, because when you can start making a robot that can compete for human tasks cheaper than labor cost in Africa, China, India. I mean, when you can compete with those labor costs, then what happens to their societies if they don't implement this? Like, what happens to these entire developing nations that completely require these jobs to expand right now? And now one robot can do their job at a quarter of the cost. Like, you really got to ask yourself, is this going to lift us out of poverty, or is it going to be a literal transition from capitalism to socialism where the whole world gets lifted out of poverty and universal basic income is the new way of life? Like, capitalism doesn't function under an AI like
I'm
world.
gonna,
It's so weird.
I'm gonna, I'm gonna break this down generationally because I've thought about this a little bit. So for our age group, you're 33, I'm 39. We have one option, if you're working in something that's not a trade, adapt or die. That's it.
Yeah.
So I think if you think anything differently, you're going to get laid off. Adapt or die. Don't get married to, you have no job. Don't get married to what your job is. I don't have a job. You can mold me in any way. I just flow with things. My skill is being adaptable. I'm a human being. So your skill now, what are you good at? Adapting. You have a certain framework of skill sets and you adapt within that. You leverage every technology you can. And it might be exhausting. I'm sorry, you're going to be exhausted now until you retire. But you're going to have to keep shifting every 6 months and keep building on your a skill set. You can't do what you did like our parents did, which is you just do the same thing for 30 years and you retire. It's like, no, you're changing now with everything. But just stay smart, stay hungry. That's it. That's it. And if you do that, you'll be fine. The younger generation, they're born into this. They're literally a 10-year-old, a 20-year-old are born into the AI wave. They're adapting without even thinking about adapting. They're the ones who are going to be creating all this stuff. They're going to be creating all these weird startups and doing all that stuff. They're going to be integrating AI into everything they do. So they're going to have jobs and things that, believe me and you can't conceive of yet. We have no idea what they are. They're the ones creating it. They're born into it. They don't even know a world without it, right? We're freaking out because we're the old guys going, what are we going to do? So I don't think that worry is going to be so much for, let's say, 20 and younger. They're going to be in a world where that's all they know and they find their way in that and they build that world. It's about us making sure we don't adapt and die. People older, and it'll be something similar like this. People still read the newspaper and listen to the radio because they're born to that world. We, just the way our brains are hardwired, are going to be doing, I still turn the radio on in the car. I don't sync it to my phone and listen. I listen to the radio. There's gonna be always a market for us old people stuff that doesn't involve AI that we're gonna do. We're gonna seek out human connections. I purposely a lot of times I don't comb my hair. I keep like this. I go like this. I don't clean up too much. I don't look very polished because I know AI looks polished because I'm projecting, this is my marketing background, that in 5 years, everything on YouTube, most of it will be AI generated, clean, crisp, smooth. Thumbnails will all be more perfect than they are right now. Audio, everybody will be talk perfect. Enunciation will be perfect. And then I'm gonna show up in the algorithm with a clearly human made thumbnail, me talking like this, and being human will break through the algorithm.
Yeah.
That's what's going to actually stick out to the eye. So I'm trying to get in on that now and be like, this is a guy like this, and that's going to cut through.
It's
only for the oldies, only for oldies though, not for young people.
It's
They
an
might not like it.
speculation for sure. Is just kind of getting a framework, but I've heard so many different things. Like traditional, like theater is going to come back because theater's dying. It's all old people right now. Being in the entertainment industry, it's a dying career. But people are thinking it's going to have a comeback because it's going to be the only thing that is real. But I don't like like you and I. We can only speculate on what tomorrow's going to bring in that aspect. What I can, with a high degree of certainty, know is that company efficiency is about to go through the roof. We're going to see company margin expanding in a way we've never seen before. So if you think the S&P is overvalued, you're backdating your stuff, and you can't backdate. You got to look forward and get an understanding of like, okay, what's going to happen and how are we going to get there? And it's going to be quite a wild transition for most of these companies, especially these top weighted companies that are already owning the software and implementing the software. But again, like you're saying, you're a lot more optimistic than I am. I'm a little
100%.
bit I'm a little bit more cynical in the sense I don't know how you teach kids like, yeah, they can learn to use AI, but they're not tools. That's the problem that I have is that they're not implementable tools. Because even like as a magician, as an entertainer, like I found props and things that I could use as tools in my performance, but the AI is the performance. It is everything combined. It is the intelligence of utilizing the tools. You're just using it like literally as a prompt, and you don't even have to use it as a prompt because you can just chat GPT most of like I don't even know how to express that like the world is literally getting to a click of a button, and that is not a job. That is not employable. The truck that I get to click one button that is going to drive to the end result isn't the job. And the tool is a click of a button. That is one person can now do the job of 50, 100, 1,000 truck drivers. It's the same in every single industry. And I know we keep saying that like, I like the idea of construction in the near term. If I was 20, I would go get an apprentice, start getting paid today, start investing, get a house, get it paid off, and get myself ready by the time I'm 30. But again, the farther you look out, the scarier it gets, because when you look at how the entire world functions today, if you replace China's cost of manufacturing, if you are able to do that and you're able to scale it over a 5 or 10 year period, you just wiped out an entire economy. And how does that function in the future? Now people have jobs, but they know their job has no meaning to it. It's like, I don't like what happens, like philosophically, what happens, right? Like it's
okay. I got a couple of things on that. First off, there's a thing I heard how people use AI. Right now, AI is Pong of video games. It is Pong. We are so early. We're just playing Pong. And we think we know what we're looking at. We don't know what we're looking at. So that's why I said don't get married. It's hard to project 5. You could be, whatever you're saying, worst case scenario will either be 100 times worse than that. And my best case scenario will be 100 times better. It could be easily, because we have no way of, we can't conceive of this.
Exactly.
It's because we're playing Pong right now, and people playing Pong never thought that we'd be wearing VR masks and doing all that, right? So there's that. And then the way AI is being used right now is older generations older than us are using it as a prompt, like, hey, like a search, advanced search tool. A lot of us use it as strategic advisors. Hey, how do I do this? Like live my life and give me feedback, and we can bounce back and forth. And then younger people use it as a whole operating system. It is just operating their life is AI, right? So they integrate it way more. And that's what they're noticing. People who are developing AI, like, oh, young people are actually utilizing it properly. Now, third, it's going to start replacing jobs, especially in countries like China. What is China suffering from right now? What's the world suffering from now? It's not overpopulation, it's underpopulation. China can't backfill they're underpopulated. They have all these manual labor jobs that they're worried they're gonna have a huge economic crash because they didn't produce enough babies in the last 20 years. So they're worried that, hey, we've been pumping out all this stuff. What's gonna solve the problem? AI and robots. That's how you backfill the problem. Now, population is decreased everywhere. In all advanced countries, it's people aren't producing babies. You're maybe one per household. Japan's not even doing them at all. They're in deficit. I'm pretty sure Germany's in a deficit. So no one can keep this world going unless you start filling in the gaps with AI and robots, because people aren't producing 3 to 5 kids anymore. We're not doing that anymore in advanced countries anymore, especially in China. China will literally collapse if they don't leverage technology and AI to be like, how the hell are we going to manufacture all this shit? Because we don't have people. They're all 60 and 70 now. You have that problem. And then the world is riddled with problems, right? And we're humans and we're trying to problem solve. We want to exist in 100 years. Now we can either fast forward our way to destruction, leveraging AI, right? We can make it the worst in us, and now we got the doomsday way faster, or like in medical advances in healthcare, people are getting diagnosed faster leveraging AI. Any issue now, like, hey, how do we clean up our oceans? Let's run an algorithm. Let's use quantum computing mixed with AI. Figure out how do we create some sort of chemical that clean up our ocean? Like we can problem solve exponentially faster. So now I'm on that thing of kumbaya. We're going to make the world a lot better, understanding human nature, which means corporations are going to jump in that. We're going to suck everyone dry for their income, and it's all going to happen that way. But we're going to be in a better place off. I think we're going to continue the human trend of life is better today than it was 100 years ago. 100 years ago, it was better than 1,000 years ago. And I think we'll be better off in 100 years than we were today.
We're heading to what is called the age of abundance, right? And for better or worse, it's basically like the unlocking of like Pandora's box, and what used to be sci-fi in the 80s or 90s is starting to become a horrifying reality that life expectancy might have the potential to be infinite for all we know. Like we don't really, these are questions that, to be fair, I don't want to live long enough to answer. I like get solace in the idea of dying. Entropy is a real thing, and if you've had a good outcome in life, it's been great. But everyone's like, I don't want to die, and I'm like, I'm sure if you were in the right circumstance, you would wish death. I'm like, it's all perspective, right? But again, like I think forgetting the idea of what AI is going to do and just talking about the philosophical evolution of capitalism is going to be the real interesting, because we're going to go through what the founding fathers did in the United States and like how we've evolved into capitalism has become the most efficient thing to a new world where it's not going to be about capitalism anymore. It's not going to work in the same way we see it today because it just won't function for half of society. And like you're saying, the other scary problem is we're not having kids. Again, it's one of these things where it's just the replacement theory comes into play of like, do we merge with robotics? Do we have less kids and life expectancy goes up? Like, we don't know what any of this is, but what I do know for certain is it's not like the Bronze Age. It's not like the Industrial Revolution age. Like, this is an age that all of the cumulative evolution of humanity is kind of built up to, and now it's in this exponential technological curve. And it's not like going from this, like, I think somebody made a good point that it was really neat if you were born in the 1900s watching first time planes ever got invented to now they're dropping bombs on your city. Like, it was a very technologically rattling time, and we're going to go through something that is going to be just as rattling and just as peculiar, and it's going to change how we view everything as we see it today. And again, like, it's annoying because I'm always just like, oh, I feel like I'm going to be one of these people that's like, I have to fast track everything. Like, I just need to get this done so I don't have to worry as much about what the outcome is. But then I think in the next 20 or 30 years, the outcome is going to be a society that traditionally how I'm operating it in today won't even have mattered. I think it's going to be like, oh, savings rates and compound interest, and oh, I have to have this portfolio and I have to be rich, and all this stuff is literally going to be insignificant to, like you're saying, like the evolution in it's going to, somebody that can solve heart disease, cancer, life expectancy goes up 20 years. That value is going to be exponentially worth more than whatever money you're going to make you're putting in your portfolio, right? Like, but again, you can't have companies that control all of it. Like, eventually Microsoft or Google, like, you can't have a monopoly that runs the whole world. And if it is, it's going to be the new government entity. So I don't know. Like I said, people got to be.
I think that's the bigger worry. I think that's where I feel like it's likely to happen. It's not going to be like governments running. It's going to be corporations.
They already are.
They already are, but like, even more so.
Yeah.
Think of it like this: like, there's quantum computing right now, which can run every variable known to existence in a microsecond, right? And they're the size of a house because they need coolants and all that stuff. That's going to get manufactured down smaller and smaller and smaller, where it's more accessible. What's going to happen to the finance industry when you can predict every variable of a performance and like? How do you even do stuff anymore? Like, I don't. That's part where my brain goes like, I don't even know what we do will even look like. Is this going to be like? Will everything be automated in life? You're just kind of going through the motions. Who knows? It's like, that's why I'm like, I can't predict any of this stuff. I just think it'll be for the better.
It's wild when you like, I'm just sitting. It's crazy because, again, back in the 80s and 90s, the sci-fi stuff was almost laughable, and now that it's like it is basically a reality that is inevitable. It's such a more interesting conversation because, like you're saying, it's just weird when you think, oh, I have to go out and get a job and do this. In the future, that might not be the same case. Like, but again, that's why I think the philosophical debate with religion, capitalism is again, it's fun to think this, but I think at some point it's going to become, by the end of my lifetime, a more serious conversation of how do we want the world to look, and we're actually have to put our foot down and decide: do we want the exponential growth of technology to continue excelling us in this direction? Or do we go back to the kumbaya, what was wrong with living in the woods and just being happy with what we have in life and seeing the beauty in the things that are around us? Yeah, it's nice to cure some diseases, but do we really want this taking away the fulfillment of providing to society and providing to a family? I mean, if you have a kid today, like again, we talk about having kids, and it's like I love the idea of it. And I think the kids that are being born today are gonna be on the forefront of like Noah's Ark. Like you're gonna have to choose what animals get on board, what gets left behind, and it's just of every aspect of life, and it's gonna be just such a peculiar world that was unimaginable even 20 or 30 years ago.
Here's what gives me faith that the world will be okay. And maybe this is why I'm optimistic. I do have kids. I have a 1.5 year old. I have a 3 year old. I have a daughter who's 3. I have a son who's a 1.5 years. The best part, and that gives me faith that everything will be okay, is technology is advancing exponentially. So exponentially, it's the first time in human history we actually can't predict what's going to happen. We can't use historical performance to indicate future performance, right? Because it's never gone so rapidly that we actually can't predict a year ahead. I can't go, this happened 10 years ago, it'll happen now. It's like, no, we have no idea what 6 months will look like. What gives me the most faith that everything will be okay is that I know I'm going to die. And I know all my ideas will die with me. Every bad idea dies with me, right? And I know people are going to die before me. And every bad idea dies before them. I am a little bit weaker than my dad, a little bit more hippie, a little bit more woke, right? But I'm a little bit more understanding of other people's feelings. He's a great man. He's more understanding than his father's. My father, my grandpa went through the partition of India. He was really stern. He saw a lot of trauma. Life was hard, so he's a hard man. My dad was raised by a hard man, so he was kind of hard. He was a military man, but then he raised a hippie boy in Victoria, some brown 6'3" hippie boy who likes to play volleyball, right? Not as hard as that guy, for sure. A little bit more understanding, but he raised me that way. He was kinder than his dad. He's kind to me, created a kind guy, and who had access to more information. I grew up with some internet, so now my kid, I'm raising them a little bit kinder than me, a little bit wiser than me, has access to the information, and we've learned from every generation. I'm kind of molding them to be kind, be understanding. My daughter is way smarter than she should be at 3. My 1.5 year old is a 1.5 year old. He's a boy, so he's still like picking his nose. But that generation is going to come up a little bit better than me. I'm going to die. They're in control. They're going to do, and that's why, in general, when we go, the world is better off than it was 100 years ago, because that's sort of how it flows. One generation is slightly better. It's like if you want to guarantee the world is a better place, people always go like, hey, we can try to control people now. No, cat's out of the bag. AI's taking over. Technology keep advancing. You cannot put a stop on that button. It doesn't work that way. You can make a personal internal choice of like, I'm going to go live in the woods and go do one, the shows on TLC where people live on the Alaskan border. You can do that if you want, but you're walking away from the rest of the world. But for me, it's just like, younger generation is going to inherit this technology. They're raised with it. They're going to be slightly weaker. And then there was a quote where they said, why did the Romans fall? They said the Romans fell because while the Romans were having fun and they're living a life of luxury and they had all this, the barbarians were at the gates, right? So they're getting weaker while everyone else was still savages. Well, we're not in that world anymore. We're in globalization. The barbarians are no longer at the gates. We're all the Roman Empire.
Yeah.
China's got access to AI. Europe's got it. India's got Wi-Fi everywhere. AI everywhere. Everyone's having the same, for the first time ever, everyone's feeling the same emergence of technology at the same time because it's so accessible at a ground level. So there are no more barbarians. It's just we're all sort of figuring this out together on a planet level. So optimistic through the roof, but that's sort of the position I take on it. So that's why I think we'll be okay. Younger generation's going to inherit this.
Yeah,
and they're a little bit better.
I don't know. I'm always a bit scared of what's defined as better because I think at the fundamental, right, like survival is like Elon says, like at the end of the day, like we define better by survival and expansion of human, expectancy and all this stuff. But yeah, I don't know because like humans have this wonderful tendency to find the technology first, screw around with it, and then figure out what the aftermath is later. Like nuclear bomb, like we've been doing that forever. Like oil, carbon emissions in the air. Like whether you believe in global warming or not, you have to admit one of the greatest human experiments is taking all the carbon out of the ground and putting it in the air. We have no real understanding of what that's going to look like in 100 years. Like there's so much that we're doing that is just I think fundamentally. And again, this is like a religious thing. My wife's a lot more religious than I am, but spiritually, I still believe like we're here to experience. It's a very simple, fundamental thing. This is a reality of existence, and we just got to experience it for what it is. But man, I think Elon, there's some Chinese proverb, and I like that. I'm not the biggest fan of Elon, by the way. I'm not, but there, he's still got some good quotes here and there. But there was that Chinese proverb, like "May you live in interesting times," and like you're saying with the Roman Empire and all these, like I heard that quote from, I think it was the guy from Valuetainment, that he pulls that quote up a lot, where he's like, hard times make strong men make good times make weak men make hard times. I again, all of these, I feel like all this stuff is so outdated. Like, it's so hard to go back to the Roman Empire. Like, again, there's no time in human history where we've ever seen the onslaught of, again, genomic editing through AI and solving cancer and all these problems. And again, humans didn't even live that long up till the 19th century, right? Like the average life expectancy was like 35. So we didn't even know smoking killed you. We didn't even know, like, again, people don't take into consideration, like when you're out in a city, like companies that make tires and brakes have to consider the toxins they're putting in the air. Cause you ever notice you don't see tire fragments all over the road, even though tires degrade immensely, all that shit you're inhaling. There's so many variables and stuff that computers are going to take over. Sorry, we could ramble about this all day. I think we should backtrack and we'll finish up here. Just it's a good food for thought conversation.
Fun.
It's kind of a stoner conversation for me with my buddies, but it's a very relevant conversation, and it hits all aspects of life, whether it's financial, metaphorical, like religion, every aspect of life. So it's a really fun conversation to be had. And yeah, the next generation, like when it boils down to it for me, is like regardless whether you're pessimistic or optimistic, it's like you're just here to experience it.
Yeah,
you just try and make sure the experiences around you are great, and like. But it'll be neat to see if Elon's right with the idea that like we're just the bootloader to a better survival mechanism. Maybe nature at its core fundamentals realizes humanity's bleak. We are fallible to like everything, and that we're now making something that is going to outlive us, be more superior to us, and nature just recognizes that we're the bootloader for a better survival mechanism. Who knows, right? Like it's
a weird thing that we do as humans. We're constantly innovating and trying to create something better. No other creature is doing that on the planet, so it's something that's built into us. We're not evolving anymore. We're creating our own like exterior evolutionary thing now. Like we're just creating now, and
maybe that's
sort of how
we are. Right? The next step of evolution is beyond us, and we've reached our peak in humanity's next or evolution's.
As soon as Homo sapien or Neanderthal, either one, or Neanderthal or smart too, like as soon as they were created or evolved into it, it's like it was just tool making.
Yeah.
We're just making, look how crazy the tools are now. Like we just stayed on that path of creating tools that might become sentient and our overlords. Who knows? But like, I'm going to get off this guy. I know people are like, we came for investment advice, and these guys are just like two stoners talking about AI.
This is the reality though. This is how you get rich, right? Like you have to look forward into the businesses that are innovating this, because this is where efficiency, money, capitalism, and value creation comes from. That's why I'm always forward looking. People backdate too much. The backdating matters. But sorry, I didn't mean to cut you off. But yeah,
to be honest, this is part of the reason I wanted to make the podcast, was to have conversations like this. So I'm very, very happy. It's for my own internal satisfaction, because I love this stuff. There's I don't know if you've seen the show called Westworld. Have you seen it on HBO? Okay, so on like the third season, it goes into how the world is operated, and it's operated by like this centralized AI that's dictating everything, every move. It knows how everyone's life path is going to be and everything. And I go, that's probably where it's going to end up. Like everybody knows sort of what job they're doing, how they're doing it. They don't even know, but the AI is making decisions on behalf of them, where the content they're consuming and everything. I think there'll be a level of that, because that's almost what's happening right now. When you're watching YouTube, the algorithm's feeding you content, massaging your brain to think a certain way depending on what you've previously watched. It's not doing it with intent to get you to think a certain way. It's just seeing what you like. But I think there could be intent behind it. Someone wants to keep these people working this job, or someone doing this, you kind of massage them with content and stuff like that. I think there'll be like a lot of subtle stuff happening that people won't even conceive of, being like, oh, they've been manipulated consistently throughout their day with AI, since it's integrated in everything, right? So, but who knows? It's all speculation. I don't know, but it's fun to talk about. I know that much.
It's a very healthy conversation that more people probably should be having in their lives, because yeah, I feel like with education and everything, it's just going to get to wild. But
I want to talk a little bit more about you. You mentioned you're a magician. My wife knows this about me. I'm obsessed with magic. So when you said magician, I went, oh, okay. So first off, you've been a man after my own heart since we began talking. First, you're like, I love VR. I was like, oh, another person loves VR. Then you're like, by the way, I'm a magician. I think I married the wrong person, right? I should have married you instead. So I watched Penn and Teller in Vegas. I took the photos. I whenever there's a magician, I'll try to go watch them. I watch all the magic shows, like the competition shows. Penn Teller has a good one, right, where they do that.
Cool. That's
I'll watch the YouTube clips. I don't even like to see how it's done. I like just being fooled. I like to like and figure it out. I don't like those people who go like, here's how I did it. Like maybe if it's a simple trick, I want to know, but for the most part, I just like knowing that you did it and being like, cool, I'm fine with it. I like the illusion aspect of it. I guess, do you have time to still do that, or are you just completely you hung it up for now while you focus on this and you can come back to it, or are you still sort of
So I guess I'll just give you a quick framework of how I got into the magic side and how I got into the finance side, and maybe we can just finish up on this note, just a little bit of
yeah,
background history. Because I grew up on a farm. My mother was a sheep farmer. My dad was traditional factory working kind of guy, construction guy. Not like upper or even really middle class. Like my parents bought that farm condemned. That was during a time where it was cheaper to buy a farm and then have kids and live off the farm. Now it's like a luxury and kind of a quaint thing to do. It's too expensive to do now. But back then it was a survival thing, right? So I grew up on a farm, shoveling shit, stacking hay in a very small town that had a lot of problems. I mean, a lot of biker gangs, a lot of drug problems. I've lost really close friends to a lot of horrible circumstances, and I kind of got close to some people, and I found entertainment to be kind of an escapism for me because I grew up really loving magic, Copperfield, all that stuff. This was before people could just Google how anything was done, so you actually had to figure out like and work into how all these tricks work and all this. I was really obsessed with hypnosis, how mentalism worked, and there's a lot of psychology behind magic. I think the psychology really drove me in because I'm like, how does the human brain work? Why does magic work in this way? Why do we get attached to things? And again, a lot of that bleeds into entertainment and all that. But I got really fixated on it, and in my early teens into my 20s, I just started working for tips because I realized how I was working at McDonald's for a couple years, and I'm like, I can go work the streets in a city or at some touristy area, and I can make 20 to 50 an hour. So I'm like, forget McDonald's, I'm done with this shit. I quit at like 16 or 17. I initially wanted to be a pilot. I was trying to get my pilot license in between all this, but I ended up really leaning into the entertainment industry. Luckily, one of my closer friends at the time that was a little bit older, a little bit more concrete, away from some of the problems I was dealing with, started a DJ company. We ended up pairing up, and that like kind of launched our careers because anybody that needed a DJ wanted entertainment. Same vice versa. I could help him in his job. Got really into production. I got very fortunate to build a career off tips for 3 years. Met a lot of clients. I met my wife that way. But before I knew it, like a very successful career. Very fortunate to have success in entertainment, working for huge corporate events and galas for like Royal Bank at the Toronto Convention Center, to traveling to different places in the US to do shows for like Stock Twits, even to weddings and kids shows and all kinds of corporate events and stuff like that. It was great. It was great. And like you, love going to Vegas, seeing Copperfield, Penn all that stuff. When the pandemic hit, though, my shows were based on the history of magic. And basically, I would break down like all these different generations of magicians from mentalism and explaining how like psychics worked, giving some examples and doing hypnosis and showing like how hypnosis works, to like extreme stunts, to laying on glass and having people stand on my face in the glass, and shoving quarters in my eye sockets and doing like really Chris Angel, really kind of emo like kind of magic stuff, to escapes and Houdini styled stuff. And they were like a 40-minute hour set show. And it was really great. Like I spent a long time building that out. But when the pandemic hit, anytime I tried to post a video, TikTok kept removing it. YouTube started flagging it, saying can't be shoving quarters in your eye sockets and balloons up your nose and pulling it out. Like it's too graphic, it's extreme stunts. And I got really pissed off because I'm like, I spent a decade building a show, and I can't, it's not a Zoom friendly show, and I can't project it on social media because YouTube's getting uptight, TikTok's getting up. I just got really pissed off, and I'm like, I'm not doing this. Like I lost all like $40,000-$50,000 worth of work in 3 weeks during March. And I'm like, look, I love finance, and I was always really concerned because you're only as good as your next gig, right? So I started investing really early on, being very aware and cognizant of my finances. And luckily, during the week, I didn't have to work because I worked Friday to Sunday, restaurants, corporate events, kid shows, weddings. So during the week, I was just investing, finding companies like Canopy Growth Corp, being like, where can I put my money? Taking on far too much risk than I should have probably, but it worked out luckily very well. And then come 2020 or in 2019, after I made my first 100K, I was like, look, I'm going to start a YouTube channel just for fun during the week. And then when the pandemic hit and I got so exhausted after all this crap, I'm like, I'm just going to do YouTube for a year, at least until the pandemic's over, and then I'll go back to it. And that was the transition where all of a sudden everybody was going online. You had the explosion of Reddit, GameStop, all these companies realized, oh, like all this IR money is online. I started getting reached out from some sponsors. A big agency in the States is like, oh, we'll pay you $2,000 to make a video on a company. I was like, okay. And then they were sending me one a week, and I was like, damn, I can just sit here and, get paid this much. And then one thing led to another, and this career has evolved to where it is today. And I just haven't looked back at the magic stuff as much. I like in my 20s, it was a great career because I got to travel. I got paid to go to events, hang out with like some celebrity stuff, things that most people would have to pay for to do. And I got to do it and get paid to do it. But now that I'm in my 30s, I like being around my family a lot. Life is short. I've had a lot of friends close to me die of cancer. My one buddy had an aneurysm, almost died recently, and I like having my freedom of my time to go and spend time with them and my wife and talk about kids and just do all this stuff that a lot of people, I think, in their 30s start to appreciate more. So I don't want to go back to magic because the liability is too great. I need insurance and all this stuff. Whereas this, I get to sit at home. If something happens, oh, I'm available, right? Like it doesn't take much for me to go out and I'm sure at your time having a kid, like
I get it.
the values. That's the
You
value.
don't want to be away. You don't ever want to be away from your kids. The freedom of time. You're doing magic. You have to go do these corporate events, do these shows. That means you're away from your family. You're locked into that time as well. So you're like, I'm back on a schedule. That's hard.
Yeah.
But I have a hard time imagining you still not being a student of the game, student of magic. There's so much there. And you said you had to show that the history of magic. Like there's got to be something there. Like if you see a trick, you go like, oh, I wonder how they did it. Like
So you don't lose what you have because, as I like to tell people, when you take something from a hobby to a business,
Yeah.
it's not it. You're gonna lose the magic. The thing that I enjoyed most about the entertainment industry was meeting people like yourself. Like I love meeting people from a whole different walks of life. I love getting to know people. Magic is a great barrier, regardless of language. Like you can do stuff that just engages people, and I loved having those experiences. And that's the only thing I really loved about it. But again, once you turn it into a business, it's like now it's a grind, right? Now it has to be consistent. I need to find work. I like you have to get stuff that's affordable. Margins have to be there. All of a sudden, like it really changes that aspect of it. And I had some bucket list stuff that I did, like you. Like I met and saw all these magicians: David Blaine, Chris Angel, Penn and Teller, all these magicians I grew up with. I've been very fortunate to see their shows and engage with them. And I think I've had my fulfillment out of it. I still, to this day, people will ask me, and I love showing them stuff, and they still get all. It's like riding a bike. Like you're still good with card manipulation, all that stuff is fun. But I have no passion or desire to, because again, it was a job, right? And you do it for a decade, and it's just like after a while, especially if you can find some other stuff that's more entertaining or something new that it, ignites that aspiration. I love theater though. Don't get me wrong. I still love theater in all aspects, regardless of magic, but theater is dying. And I'm probably one of the few young people when I go to theater shows. Like I was going to Stratford to watch, plays, and I loved it. But even then I recognized that I was the youngest person there. And me and my wife now, we get tickets to shows, like early releases of shows at theaters. And if you've ever been to a theater lately, there ain't a lot of young people, man. It's a lot of old people. It is a dying industry.
Yeah, I had an actor on for episode 1 of this podcast. He's done a bunch of stuff. He's done Once Upon a Time on NBC and a bunch of stuff. And we had about a 30-minute segment just talking about theaters and where he thought. Because I was like, "What's going on there? Is this gonna be a bunch of old guys like us who go to the theater?" Because and he's like, he's convinced that it'll basically be the interactive experience, like wind in your face, stuff like that, and people will be going for that whole thing. It'll become more interactive, and that'll bring people back. But he's in that space. That's his career. That's what he does. Yeah, that's right. Either way, like, it's kind of nice though. Like you don't have to rely on it financially. You can now just do it for fun with your friends. Maybe
Yeah.
you can actually enjoy when you watch a magic show. Now you're not looking through the lens anymore of, oh, I'm in the business of this. What are they doing? How do I like? There's that whole stress of it. Now you can be like, oh, I don't even care. I can just enjoy this now as a spectator, right, and not have the business hat on when you're looking at magic.
It's hard to watch shows. My wife hates me because she's a lot less critical than I am, but because from a theatrical standpoint, not even just magic tricks, like I heavily judge shows based on like a lot of different factors. So like we were just on a cruise, and I loved it because the amount of entertainment they offer in the shows. And yeah, she's annoyed. She's like, that show is great. And then I start naming a bunch of stuff, and she's like, why do you got to ruin it for me? And I'm like, look, I just have a different level of expectation from a guy that spent a decade building out an interactive show. And I'm like, I just need a certain thing in a show, regardless of what it is. And if it's not there, it ruins the magic for me. So it's like,
Fair enough. You're the pro. So.
Yeah, a little too critical these days. But I grew up in production, man. I love building. Like I used to build stages and laser, like $500,000 show setups. Like I was really lucky to work with a production company earlier on when I was a lot younger, and getting that experience as like kind of a roadie, I guess, to some extent, not with like a band, but just purely with one of the largest production companies in Toronto. Like I pay a lot of attention to lighting, choreography, and all that stuff. It's fun, but maybe in retirement I'd get back into it. But a lot of the theater guys that I still know, they're in their 50s. They're not young people, you
Yeah,
know.
yeah, fair enough. All right, so just to wrap it up, what kind of stuff can we expect from your channel moving forward? Any sort of videos you have planned that we can keep an eye out for? I know the stuff we talked about today, guys, earlier on the podcast. You can find his video on it, him kind of whipping through it. It's a lot shorter. It's about 10 minutes long, maybe 15 minutes long. Check out that tax video on corporate tax. I love that one. I was watching that last night. What do you have coming up on your channel? Anything, certain topics you're focusing on? I know you do a lot of individual stocks and
Yeah,
whatnot.
I'm going to try and talk about the AI a bit more. Unfortunately, like I have to lean into some of the what drives views, which is a lot of Canadian oriented content. But I'm kind of moving into this transitional phase right now, and I keep telling people to kind of enjoy what I'm posting now because I'm not going to be this open about everything. Probably soon, just because it's fun watching yourself go from nothing and keeping yourself accountable and putting it in the public. Because again, in 2019, when I started my YouTube channel, you guys can go back and watch it. I sold all my gold. I was very paranoid, so I had a lot of gold. At least half my portfolio was in gold. Sold it, put some of that into Tesla, like a lot of great companies that worked out way better than the gold position. And you can see I had like literally 100 grand, and now like I'm fortunate to have a wife. We both have working careers. Like we have great incomes and stuff like that. But I watched my buddy recently do it too. Like when you start getting into that 7-figure club combined, and you're starting to see like even your working income go up pretty substantially, like you start realizing the risk behind that, and like just throwing it out in the world. Like it's great people know that you have money. It's different when you're showing them everything, right? Like I've been very open about my corporate accounts and like showing the returns of my TFSAs and all that stuff. But I'm kind of getting to a point now where I feel like in the next year or two, as I reach my desired goals, because like I had an initial goal, and I keep telling people like there's just some things that I want to have happen that just kind of give me that financial security I've been looking for. But from there, I'm not really sure what the content's going to look like otherwise, because I still like looking at companies and doing the investment theses. But right now, it's a grind. As I'm sure, like you, I'm posting like a lot. I have a full time job, and I'm still posting a lot of content, doing live streams on weekends and stuff. So the only thing I'd say is enjoy it while it's here. Yes, I do sponsored content. A lot of people don't like it. You don't have to watch when I'm promoting smaller cap companies if those aren't your investment styles. But I talk about everything from small caps to large caps to ETFs. So hopefully you can find some knowledge out of it. But again, anybody that's out there doing it like I'm doing it, just get your enjoyment out of it. Because there's not too many people like me left. I noticed that offer full transparency these days in the way that we do it. But I feel like too, and it's kind of hypocritical, because if it wasn't for this channel, I don't think I would be doing, because a lot of people think they have to be doing stuff all the time. And the way you get rich in the market is by just setting it and forgetting it and cost averaging. And we come here for entertainment, right? So don't get too squirrely, because I always joke about a squirrel without a nut. Like everybody in this YouTube space is like, what's the next thing? Where is it? I got to buy this. I got to sell this. And it's like, I'm not a trader, and you shouldn't be either. 98% of people are going to fail at day trading or regularly trading. So you got
Yeah.
to find a strategy that works for you. And hopefully my channel can inspire you to find what works for you. But again, it's hypocritical because I post so much and I'm like, watch my content. But at the same time, like, I don't think it's healthy either to overabsorb. I have a really good tolerance because I'm in it. But like I do very little in my portfolio. I mainly just keep buying stuff. And then once in a while, oh, I sold SCHD, and everyone loses their mind. And I'm like, I've been holding this for like 4 years now. I'm like, this was a very calculated decision, and I gave it time and I judged it. But all of a sudden people are freaking out. Oh, he flip flops all the time. And I'm like, do I though? Do I really flip flop that much? It's like I'm not like Meet Kevin, I'm like a little more methodical. I'm very slow these days. I don't own a lot of individual stocks, and people get bored. You can't just keep talking about Google every day either, right? So,
Fair enough. Fair
yeah.
enough. All right. Well, it was great talking with you today. I really appreciate it. And guys, check out Kyle's channel. You'll see it right now on the screen. And talk soon, brother.
Thanks so much. Cheers.